miejscowościami Ruszkowo i Prześcień Wielki. Tam właśnie ruszają dziś wojskowe ćwiczenia. Ćwiczyć będą piloci MiG-29, Su-22, myśliwców F-16 czy samolotów transportowych Herkules i M-28.
W związku z tym trasa dla samochodów będzie zamknięta aż do 3 października. Walka o kryształową kulę trwa. Posłuchaj w faktach RMFFM.
Walka o kryształową kulę to nie dziś, natomiast już teraz na pewno zapraszamy na poranną rozmowę w RMFFM i radiu internetowym RMF24.
Bogdan Zalewski, jego gość. Witamy.
Gościem, dzień dobry, jest przewodniczący Klubu Parlamentarnego Lewicy Krzysztof Gawkowski. Witam serdecznie, panie przewodniczący.
Dzień dobry i miłego dnia na początek.
Bardzo dziękujemy. Lewica pojechała do Wiednia, żeby prowadzić taką mieszkaniową kampanię wyborczą w Polsce. Bardzo oryginalny pomysł, ale czy nie za bardzo egzotyczny jak na polskie warunki?
Nie, bo we Wiedniu mamy najlepszy program mieszkaniowy, który udowodnił, że mieszkanie na wynajem, tanie mieszkanie na wynajem, to jest szansa, żeby na rynku zmniejszała się luka mieszkaniowa, żeby ludzie nie musieli myśleć tylko o drogich kredytach hipotecznych, ale żeby mogli wynająć mieszkanie, które będzie i tanie, i dostępne.
Ale czy wiedeńska polityka mieszkaniowa to nie jest wyjątek na skalę europejską, nawet austriacką?
Nie, dlatego że podobny program jest przez Lewicę kopiowany we Włocławku, województwo kujawsko-pomorskie i okazuje się, że mieszkania na wynajem dają szansę, że rynek gospodarowy staje się coraz bardziej stabilny. Dlatego proponujemy, że 300 000 mieszkań w ciągu najbliższych 5 lat. To taki program, który dałby poczucie też, że w Polsce można zrobić coś, z czego Polacy będą dumni.
Wiedeń, Włocławek, a Warszawa też się przyjmie?
Przyjmie się cała Polska, jeżeli utworzymy Fundusz Budownictwa Społecznego, który Lewica proponuje, taki dla samorządów, gdzie będzie finansowanie 100% przez państwo tych budynków, a później samorządy będą się zajmowały obsługą. Możliwe to jest. Wystarczy sięgnąć po pieniądze z KPO, o którym mówiliśmy już od dawna, a później w Polsce budować.
Eksperci podkreślają, że Wiedeń ten swój program mieszkaniowy, taką strategię realizuje od 100 lat, cały wiek. Ile lat w Polsce daje sobie Lewica?
Na pierwsze 300 000 mieszkań daje sobie 5 lat, ale oczywiście my nie mówimy, że budujemy od razu 1 000 000 mieszkań. My pokazujemy, że perspektywa i strategia jest ważna. Jak nigdy nie zaczniesz, to nigdy nie skończysz. Musisz zacząć. Więc w Polsce mówimy, zacznijmy w roku 2024. Wygrajmy wcześniej wybory historiczne wcześniej i róbmy to.
Zaczęliśmy naszą rozmowę, ale na tym nie koniec. Szef Klubu Lewicy Krzysztof Gawkowski pozostaje z nami wyłącznie w internetowym radiu RMF24. Słuchajcie nas dalej, zachęcamy. Nasze radio znajdziecie na portalu rmf24.pl i w aplikacji RMFON. Zapraszam serdecznie. Bogdan Zalewski.
Bogdan Zalewski, Krzysztof Gawkowski o tanim mieszkaniu na wynajem po wiedeńsku. Do porannej kawy od teraz w radiu RMF24.
A za godzinę w porannej rozmowie w RMFFM Marcin Przydacz z Kancelarii Prezydenta będzie gościem Roberta Mazurka. Już teraz zapraszamy. Radio, muzyka, fakty. RMF.
Sorry, top podcasts from Apple UK unofficials updates are not available right now. Sorry, Bloomberg opinions updates are not available right now. In weather, in Milnthorpe there's a flood alert in effect. The current weather is 14 degrees Celsius with partly cloudy skies. Today, you can expect clouds and showers, with a high of 17 degrees and a low of 10 degrees. That's all for now. Wukash, there's nothing on your calendar for the remainder of the day. Today, in Milnthorpe, the air pollution level is low, with an air quality index of 3. Currently, in Milnthorpe it's 14 degrees Celsius with partly cloudy skies. Today, you can expect clouds and showers, with a high of 17 degrees and a low of 10 degrees. Also, there's a flood alert in effect.
Alexa, play Bloomberg.
Launching Bloomberg Europe.
So we'll focus in on that, on the oil story out of Cushing. You've mentioned China being a focus, and that seems clear through the Asia session. You've got Japanese stocks going higher, but that's to do with the yen, and you've got Chinese stocks coming down. Interesting analysis by Bloomberg Economics. We've asked the question, how many small measures does it take to make up a bazooka in terms of stimulus in China? And they've done some analysis and come to 2% added to GDP in the second half of this year from policy so far.
Yeah, actually, Anna, thank you for highlighting this piece to me, because I hadn't spotted it already before you kind of sent it on. But I actually think this is really interesting. It's saying that maybe one of the underpriced narratives is that Chinese growth in the second half of this year and the start of next year is better than expectations. It's important to emphasize this is not a super bullish story on China's economy. It's just saying that, hey, all these stimulus measures in isolation get dismissed, but they really are adding up to something quite significant. And that is maybe one of the economic drivers out there that we need to start pricing to the market in the second half of this year.
Okay, remember you can get up-to-date analysis and insight from Mark and the rest of the market side team. NNIB goes the function to use on your later.
Okay, here's what else is on the docket for the rest of the weekend. Later today, we're going to get Germany's IFO or IFO business climate survey as we kind of wring our hands about the fragility of the German economy. So actually give us a little bit more guidance in terms of how things are shaping up for Europe's largest economy. Then on Tuesday, US data, including new home sales and consumer confidence, come out on Wednesday. The French budget for 2024 is going to be unveiled. President Emmanuel Macron has promised to find at least 15 billion euros of savings to cut and address the French deficit. And on Thursday, we're going to get a barrage of inflation data from several European countries, including Spain and Germany. And later in the day, Nike earnings coming out as well. So a bit of a gauge in terms of the retail sector. On Friday, the Fed's favourite inflation gauge, the PCE, of course, is coming out, or will come out, and that could give us a little bit more clarity in terms of how comfortable we are, potentially, with the idea that this is a Fed now solidly on hold. I don't know how important that inflation data is in your mind, Mark. Do you expect that you're kind of clutching for a bit of clarity?
Yeah.
I think as many in the market seem to be this Monday morning. Do you think the data that comes through towards the end of the week is going to give us a little bit more of a steer?
I hope so, but I'm worried. I feel like we're not close to another narrative, so it'd be surprising if this week did give us that clarity. We're at that time of year where people normally like aggressively chasing trends into the year end. You can have the dynamic that people either want to have made a lot of money and they're like retrenching, so they're not fighting till it goes too far, or people feel like they've got to push it because they're like, this is their last throw of the dice to have a good return before year end. So you quite often get new narratives that run from about late September into the end of year in the hedge fund community. I feel still that the consumer data is more important, and that goes my narrative. I think the consumer falls off a cliff. I think we all agreed that inflation is sticky at high levels, and it's not likely to run away again to the top side yet, and it's not come down fast enough. So I think it's more about how quickly the consumer falls off a cliff that's really more important.
It's interesting mentioning hedge funds. I did read, connecting that with the oil story and inflation. I read that hedge funds are getting excited about putting on bets on moves higher on the oil price. So that's something we're obviously continuing to watch. 93.74 is where we are on Brent right now. I was struck by how many reports over the weekend I was reading that were referencing these unpredictable elements of the US story right now. Shutdowns, strike activity. We've had better news around strikes around the Hollywood writers' strike, but certainly watching the auto sector and the shutdown narrative and what that does to sentiment.
Yeah, I'm worried about the strikes. Like as we said, I think this is the element that people are struggling to price, particularly in the auto worker sector. But I think that's probably a bigger driver than the government shutdown. We have to remember the last time the government shutdown lasted for a long period of time, 2018, 2019, the S&P 500 rose throughout the crisis. So it's not necessarily a stocks negative. It depends how long it goes.
We also used to talk about looking through it a lot, didn't we? And how it really wasn't going to be a story. It was just sort of showboating and a set-piece event that happens every now in the US. But the coverage seems to change.
The data suggests historically, generally, that the economy takes a little bit of a hit, but then you get that pick up when the government reopens. So across the line, it doesn't really change the economic dynamics that much. Not as much, for example, as those strikes. Ben Ayman's saying it is the triple S that you should be looking at, the shutdown, the strikes, and the student debt as well, in terms of the components going forward.
Yeah, and we'll see if we continue to get data if we do get a shutdown. Right, coming up on the programme, UBS says it's working at full speed with the integration of Credit Suisse. We hear exclusively from the CEO, Sergio Motti, later in this programme. Plus, Brussels takes Beijing to task, the EU trade chief, saying the bloc is ready to de-risk from China to protect its interests.
Well, up next, US futures are in the green just about, despite that caution driving the session in China. We're going to get you set up for this week's markets after an eventful week, of course, of central bank decisions last week. If you have any questions of your own for our guests, send them to us on Agri Plus TV Go. You can, of course, get more from the Market Today team on the front page of the Bloomberg UK website or by typing TLive Go on the terminal. This is Bloomberg.
Morning. Yes, we got still ATR quite small after this huge sale last week. I rather too wide with opening the trades. You can see we ranging, we cannot make any new high, any new low. I'm not interested in anything at this area.
Welcome back to Markets Today. We have 45 minutes until the start of cash equities trading for, yes, a Monday morning. And the European futures picture looks a little weaker this morning, in contrast to US futures, which actually points a little higher, up 0.3% on E-news this hour. Tom, let's come to you. Oil focus this week with some data.
Make an advice. I would not like the price to go
It's interesting, you and I were
above
talking about the fact that we've seen some
the red
hedge
line,
funds
the
positioning
sell
for a
line.
bit more upside on the back of the tightness in terms of
Prove that
supply
we can
coming
stay
through
and then
for
go.
that market as we look at
The
Brexit
same.
around that
I
93
don't want to buy from
barrel
here
level.
yet. I like
This
the
is a
price
piece
to go
by
a
Javier
little bit
Bass that
lower.
I wanted to pull out for you.
When we
Of
go
course,
to
Javier Bass
buyers.
is an economist who has for many years charted and navigated these global energy markets and is so well versed in this story. And he's just flagging for us and previewing the IEA World Energy Report. So they'll be coming out in October, and they've already flagged the IEA suggesting that they're going to have a report that's going to point to a peak again in terms of oil and coal consumption, fossil fuel consumption. And Fabio Brass is saying, hang on a second. And what he's pointing out is that the IEA, in his words, are the gold standard when it comes to statistics about the energy markets. But he also points out that in terms of forecasting, they don't have a great track record. He talks about the fact that they called the peak in terms of coal consumption out of China. Well, that didn't come to pass. They underestimated the build-out of the demand for solar. They underestimated the impact of the shale revolution in the US. And what he's saying is that even if we get to a peak, arguably it's not the peak that's most important, it's where the demand of where the curve goes after the peak. And he said that if you look at coal, for example, the peak was called in 2013, but in fact we've seen coal demand picking up. So he's just very cautious that even if we get to a peak, as the analyst suggests, that we may be getting closer to, it's where we go from there that's going to be really important. And this is the put-out quote then. The day when the world's use of fossil fuels reaches its maximum is nearer than ever. I'm afraid, though, that anyone thinking about a rapid decline after an extended ascension would be disappointing. Of course, this is consequential, essential for how we think about the climate crisis as well.
Tom, I love this morning mushroom. Thank you for highlighting. I do love that dramaticness of that shot and how quick the decline is. I do wonder, though, if this is like some of these other technology stories where it constantly disappoints, and then changes much more radically than people think later than it happens. And particularly in this context where some of this transition might ultimately be about a technological breakthrough. So I think you'll have a breakthrough in terms of battery ability to store and kind of transmit stuff efficiently, and then suddenly oil might suddenly fall off a cliff much quicker. So, like, I mean, this makes sense, but I do understand. I think that's the point that these things constantly disappoint in the curve, maybe like coal, but I just wonder at some point whether we really just shut down oil very rapidly.
We also probably, with this long-term review in mind, need to keep an eye on Western governments and their level of commitment to this agenda, because the technology innovation is part of the story, but also the stick being driven by political change, and we focus on Europe last week in the UK, and today we're going to hear from Emmanuel Macron over in France on the green agenda, so plenty to think about there. Let's get a view on the markets now. Daniele Antonucci, Chief Investment Officer at Quintet Private Bank, who joins us now. Daniele, very nice to have you with us, and thanks for joining us. I wonder if we'll start with oil and the way that ties into your commodity view and where you think that takes us. A lot of people concerned about what that does for inflation from here, whether we see another pickup in inflation. Others say actually it won't really feed through that way, it'll just weigh on growth. What are your thoughts? Good morning.
Good morning to you. Oil is very important to our outlook, and it plays out in two ways. One, I think, at least in part, is an explanation on why we didn't get much clarity last week from central banks. At the end of the day, if you think about it, central banks have an asymmetric reaction function now. The cost of getting it wrong on the inflation side and getting second-order effects, maybe because of oil feeding through if it stays elevated for an extended period of time, those risks outweigh the risk of eventually getting it right and ultimately engineering the soft landing that they are all aspiring to. So that's the first thing. And this also justifies for me why central banks are typically on hold or describing an outlook where they say they are close to peak rates and no cuts in the near term. And these are hawkish holds, right? So upside risks will exist when it comes to inflation. So that's the first point. So the second point is that the pickup in oil is a recessionary impulse. And that's why I think there's so much uncertainty on the path for treasury yields or bond yields in general, because a oil spike this time around is likely to be disinflationary.
But Daniele, how do you adjust to that hawkish pause environment, that higher for longer consensus that seems to be forming for these central banks? How are you thinking about repositioning to that new reality?
So you have to think about the asymmetry when it comes to the risk or reward on different types of market positioning. One view that we have right now, for example, is that if you look at the US, treasury yields are attractive, they're attractively valued, they're already yielding quite a bit. But spreads, the differential of riskier bonds on safer bonds is quite tight. So treasury yields are attractive, spreads are tight, the full effect of the rate hikes is not feeding through just yet. And so we are overweighting treasuries and we are underweighting spreads on riskier bonds. When it comes to Europe, I think we are more at the peak. Basically, after all, was on hold. We've been neutral so far on Eurozone bonds. Now we have increased our position with the view that we are at or close to peak rates.
Daniele, good morning. It seems to me that overall your view is very defensive, I think, globally. And I sympathise that, and I think that many people would share that kind of view at the moment. But what are you most concerned about being wrong? What keeps you awake at night that you've missed the fact that we're just on a little bit of a slowdown in the equity market and we start booming again into year end? What are you watching for?
Okay, sure, Mark, this is a very important point. First of all, I would describe our view as very defensive. I would describe it as somewhat defensive. For example, in the first half of the year, we have been overweight US equities. Now that's worked at around the middle of the year because of demanding valuations and because of the slowdown that didn't come in the US just yet. We started to underweight slightly the US market. But within that, we like low volatility stocks because I think at the end of the day, we had already a pretty strong rally, a rather narrow one, and again, valuations are even more demanding, and probably the slowdown, regardless of whether it's an outright recession or more like economic weakness, this should come. What if we're wrong? I think the key here is diversification, really. It could be that this time around, the relationship between policy tightening and economic growth is particularly delayed. It's also true that the economic cycle could be different in many ways. But you mentioned yourself, the triple S, student loans, the government shutdown, the fact that we have basically the supply constraints when it comes to oil. All of this, I think, suggests to us that you want to be somewhat defensive, even though you don't want to overdo it, precisely because the economy could perhaps run a while longer, and risk markets now are facing air pockets, but it's not a guarantee that they have to go down to the real estate.
Daniele, I wanted to ask you about Italian assets at this point. We had some news developments over the weekend that suggested that the government is going to allow banks to avoid paying the windfall tax if they boost their balance sheets. We've seen this as something that has weighed on bank stocks recently, and our colleague Valerie pointing out that this could move BTP markets as well, because it could mean that banks have to buy more BTPs to put on their balance sheets. How are you viewing Italian assets with those news developments in mind?
So these developments, I think they could move markets. So we've seen the back and forth already, on the back of that. Initially, these policies were supposed to be much more stringent, much more restrictive. Then there was a backtracking already, and now that's had a market effect. And so this continue to have an impact on Italian assets, on bank stocks, for example, but also on BTP spreads. I think it's very difficult to call because these moves could reverse, because also the fundamental picture isn't great. Before you make references to the German economy, by and large, they apply also to the Italian economy or the Eurozone economy for that matter. And at the end of the day, I think BTP spreads also, they are relatively tight and high quality bonds remain attractive. So in general, even though our view on Italian assets isn't negative per se, we are neutral. I think we want to be cautious at this stage because of the uncertainty and volatility that these policies can generate in the marketplace.
Then from Italy to the UK then, and I know you've started to add gilts into your portfolio selection as well. How much of that is a valuation, a relative valuation call versus a conviction that this is an economy that is heading for much bleaker times?
It is both actually. So there's no question in my mind that the gilts now are more attractively valued, like other quality bonds, other government bonds of Eurozone economies or the US. But it's also because we think that the probability of recession for the UK is high and higher than its peer group. And so taking both into consideration, we thought it was the right time to move from a neutral position on gilts to an overweight. So it's both the recession call and also because valuations are not demanding at all. These things are cheap.
Where are you in FX? What's your view on the dollar here? It continues to kind of confound people this year. This is the year the big dollar downtrend has made a start, then had a really strong bounce, which now seems to be reiterated again after the central banks last week. Where do you stand?
So we thought that too at the start of the year, or rather, when we started 2023, our view is that we were going to see a gradual dollar devaluation because fundamentally we think it's overvalued and because central banks in other parts of the world were going to catch up with the Fed. Then we got this part of risk aversion, we got the strength of the US economy, we got more rate hikes or a more hawkish Fed than we thought. We were expecting the pause sort of earlier than materialized. So I think that's all of this explains why the dollar has been stronger versus our central scenario versus our forecast. In general, though, over the medium term, I would think that dollar should give some up value versus the euro. Sterling maybe is a different story in the near term, but the overvaluation argument still remains. Once we are through the recessionary impulse, probably risk aversion would diminish and risk appetite could come back. Some international assets offer better value than US assets, and so the dollar should weaken somewhat. But at the end of the day, I don't think it's a straight line, and I don't think it's a particularly strong depreciation that we would envisage, not in the near term.
Okay, Daniele Antonucci, thank you for joining us this Monday morning. CIO of Quintet Private Bank of Russo, being overweight on US Treasuries, underweight slightly riskier bonds, and leaning into UK gilts as well. Thank you for appreciating the time. The EU's trade chief, meanwhile, warning Beijing.
Yeah, nothing interesting happening.
In defending its interests. We get the latest. This is Bloomberg.
Better just to stay away. I took very small scalp. Short, then I close it.
Jobs numbers are released. Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Women like Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
Welcome back to Markets Today. We are half an hour away from the start of cash equities trading here on your top stories. Chinese property stocks drive Asia benchmarks lower after Evergrande cancels a creditor meeting. US Treasury yields climb amid ongoing concern over a possible government shutdown. The EU's trade chief warns China the bloc will be more forceful in upholding fair competition. Plus, the troubled Swedish landlord SBB gets a second $720 million cash injection from Brookfield Asset Management, making the Canadian investor the majority shareholder. Tom, a lot to be negative on from China coming through for the Asia session. More positive out of Japan. How does all of that flow through into the European expectations, the European futures?
Yes, a reminder again of the property woes of China. Of course, they will not be cleared up quickly. SVB over in Sweden, of course, a bit of relief coming through there, as you say, in terms of that injection of capital. We'll be watching Italian banks as well, given there's been some reporting over the weekend around some adjustments from the team led by Maloney around the windfall tax, surprise windfall tax, that may lift in terms of the adjustments. May see a bit of movement in the Italian banking sector. We'll focus on that, certainly. But also the basic resources sector and how that plays into particularly the FTSE 100, given that iron ore prices have slumped in the session today again, linked to the lack of stockpiling of some of that material by the Chinese developers. Normally, in this period of time, this part of the season, that is what's happening. It seems like it's not happening to the same extent. Futures pointing lower on DAX, going down 41 points, pointing lower by about 0.3%. In the UK, then the FTSE 100 pointing lower by about 0.4%. And over in France, as we look to the budget being unveiled by Macron later this week, you're looking at losses of about 0.4%.
Okay, so that's what we see on the futures picture. US futures pointing a little higher, Nasdaq futures up by 0.3%. So we keep that in mind as we head into the European session. We'll keep an eye on commodities where we see some movement lower on, for example, iron ore. Mark, I know that central bank balance sheets, an area of focus for us for many years now, and once again a focus for you.
Yeah, actually what I thought was interesting last week is in all these central bank meetings, and we weren't talking about the balance sheet moves as much. It didn't seem that long ago that we thought Q2 would be the end of the world and wreak havoc. So I decided to have another look at this morning. So first of all, central bank balance sheets have fallen about 15%, just under 15% from their peak. That's the 18 months until the end of August. The reason I've done the data to that is because the PBOC hasn't updated beyond the end of August, but we are seeing the ECB and the Fed in particular continue to decline in September, and it looks like the DOJ is going to double turn. So this is the combined balance sheets of the world's four largest central banks, the Fed, ECB, Bank of Japan, and PBOC. So about 15% down from the peak in 18 months. But I want to show you why that is. And what's interesting is it's mainly the ECB, which is kind of confusing to many people because we hear a lot about the Fed's QT program. And you can see here, the white line is the Fed. And in fact, the Fed is still the world's largest central bank. It has been for the last 6 months or so. The ECB is this blue line. They were the world's largest central bank in terms of balance sheet size, and they've actually collapsed by more than 20%. And a lot of that is the expiry of the TLRTO program, the long-term refinancing operation loans that are maturing all by the end of next year. What is interesting, though, is that means that the PBOC and the BOJ are still way, way smaller than the Fed, even though we hear all about the Fed's QT. It is still the world's largest central bank, and maybe that explains some of the US exceptionalism from a market's point of view.
Okay, really interesting. We'll certainly keep that one in focus. And now let's move on to matters going on in China, and there's plenty of them to talk about. The European Union's chief trade negotiator has warned China the bloc will be more forceful in upholding fair competition and defending its interests. His comments come just weeks after the EU launched an anti-subsidy investigation into the Chinese electric vehicles sector. Of course, we have the European trade chief in China right now, tracking his movements and his commentary. Let's get to Bloomberg's Europe correspondent Maria today, who joins us with the lines from Brussels. Maria, Valdis Dombrovskis then in China, talking trade with the Chinese, saying the emphasis is on de-risking, not decoupling. What are the big themes that strike you?
Yes, and he is on a 4-day trip to China. Let's also remember Valdis Dombrovskis is a very senior political operator within the European Commission. This is someone who may not be the most animated, but he's certainly very good with numbers and has been on this portfolio for a number of years now. This portfolio trade is key for the European Union because of the single market. Now, today he is in China, as I say, with a number of messages. One of them, as you say, is that the EU does not believe in decouple, but it will de-risk from China, but also it has to do with how to balance out the relationship, the trade relationship between both the European Union and China. And today he's coming across with a very almost heavy message, very assertive tone, saying that ultimately these two blocs are at a crossroad and it can go both ways. Either they find a way to recalibrate the relationship so it becomes one of open, quote, fair trade that is a win-win for both, or actually they will find themselves moving in different ways, and that would be detrimental to the economic relationship of the two of them. At the same time, as you say, we have to put this in context. This is coming very closely to that trade relationship with China and the perceived imbalances that
Nothing
they believe
happened.
are a
It's
problem
still
now.
raining.
But also at a time in which the European Union is looking specifically at issues like
Also
Chinese
something
subsidies
changed
when it comes to the EV. That investigation is also
this
open. I
session.
should also note that Valdez Dombrovskis is not just talking about the trade, but he also says when it comes to Ukraine, it is disappointing to see that China has not really pulled its weight to try to get to a peace agreement
We don't have
between the
too
two.
many
I'm saying that China should have played a
news
much bigger
today.
role when it comes to pulling back Russia from that
Tomorrow
invasion of Ukraine.
maybe something will move the market a bit.
Rory, look, you
But just
and
I
I
can see
know
on
that the
Thursday.
Europeans have pushed for recalibration in trade between Europe and China for many a year. A lot of that accompanied by jawboning from EU officials. Are they moving beyond jawboning now? You touched on that EV investigation. Are the Europeans prepared to wield the stick a bit more in this relationship?
Tom, and I think you nailed it there, because this is not the first time we hear this idea of a recalibration of a relationship that needs to be balanced out. In fact, when you go back to the EU-China trade deal, that got a lot of criticism, but some of European officials at the time defended that deal, saying it will balance out the relationship. I think there's one number that has really set off, maybe not alarms, but real concerns in the Commission, and that is a trade deficit. It's pushing now to a record of 400 billion euros. For the European Union, they say this is not about the EU triggering a trade war. This is more about China perhaps benefiting too much from what is an open market and not so much opening to external competition. I think also we should factor what is a changing political sentiment. I think for a very long time there was this concern idea, almost suggestions that China could retaliate. That was fearful to some. Obviously, I'm thinking of countries like Germany, but I go back to my interview with the French Finance Minister, Bruno Le Maire, about 2 weeks ago, who said that concern, that fear at times, what will China do, how will it retaliate, has prevented effective action from the European Union on issues that they believe are both valid and legitimate.
Really, really interesting on this consequential visit, of course, European Union visit to China. We're today in Brussels with the implications and the latest. Thank you. Now, remaining on the subject of China, but focused on what's happening in the property sector, shares of defaulted Chinese builder Evergrande are slumping once again in Hong Kong after the firm says it's unable to meet requirements to issue new bonds. Evergrande has also cancelled some key creditor meetings and says it needs to revisit its restructuring plans. Let's bring in Bloomberg's China credit editor then in Hong Kong, Kevin Kingsbury, for the details. Then what exactly did Evergrande have to say over the weekend?
Well, first time they said that they weren't going to hold their creditor votes slated for both Monday and Tuesday. They said that because of sales the last 6 months and after consultations with its advisors and with creditors, it's decided that it needs to go back to the drawing board essentially and revisit its debt restructuring plan. Shares have fallen for Evergrande, its EV unit, and for its property management unit, upwards of 75% since the shares resumed trading over the last few months. And so it's really been a question of, because they can't see these shares rise, and because also last night Evergrande said that because of the onshore investigation, it's not going to be able to issue dollar bonds for the time being. Now that, along with the equity, they were the two key components that offshore creditors were in line to get with this debt restructuring.
Kevin, good afternoon. What are the implications of these latest developments, not just for Evergrande, but for other builders? And what are we watching for kind of next in terms of developments in this story?
Sure, Mark, definitely this was a case where this was going to be a case study for many of the developers. This was going to be one of China's most complex and toughest debt restructurings, and that if it went through, it would kind of ease the way for other smaller builders to also finish up their debt restructurings. But now here we are 21 months after its first debt default of onshore debt, and they're still kind of having to go back to the drawing board here with this debt restructuring plan. So it does not speak well to the plans of other developers either to kind of get offshore creditors on board and really get their debt house in order.
Kevin, thanks very much. That's Kevin Kingsbury in Hong Kong with the latest on the property sector in China, something that is moving.
Yeah, we'll be still in my short, but it could be a bit too stressful to sit in it and just see how the price try to do something. Good setup tonight.
Leaders of the Republican-controlled House hoping they can persuade GOP holdouts to get on board with 4 full-year bills and a short-term funding patch. A shutdown is set for October 1st unless Qantas acts. If no deal is reached, hundreds of thousands of federal workers are set to be furloughed.
Here, a senior banker at Nomura has reportedly been barred from leaving China. The Financial Times reports that the chair of investment banking for China, Charles Wang Jiahe, is not in detention and is allowed to travel within China. The travel restrictions is linked to Wang's time as ICBC before joining Nomura in 2018.
Striking screenwriters in Hollywood have reached a tentative deal with some of the largest studios, including Disney and Netflix. The Writers Guild of America, representing more than 11,500 writers, could end a strike that began in early May, if approved by its members.
President Emmanuel Macron says French troops will leave Niger by year's end, bowing to the demands of a junta in the former colony after a coup that upended France's strategy in Africa. Withdrawing France's roughly 1,500 troops marks a reversal for Macron, who previously rejected a September deadline by the coup leaders and said he'd only do so at the request of ousted President Mohamed Bazoum.
Coming up on the programme, we'll get back to your stocks to watch, including the struggling Swedish landlord SBB, which has taken a major step towards stabilising its finances. We heard from the central bank governor in Sweden last week talking about the difference between these troubled lenders, troubled property businesses, and the rest of the sector, but we will get to the details on SBB shortly. This is Midway.
Tempted to buy but not. It's okay that the viewer is holding, but still it's not the area where I'm interested to buy. I will wait a few more months to go.
Welcome back to markets today. We are a little under 15 minutes from the cash equities open. Futures running up by about 0.3%. Let's check in on what you need to know then heading into the open. Stan Hunsford joins us from our Markets Today blog. Sam, euro inflation, getting data later this week. How consequential could that be?
Very consequential. As all inflation data is at the moment, you've got central banks everywhere telling you that data dependence is still at the centre of what they're doing. Inflation very important. I think the debate around most central banks now, most major central banks, has shifted to how long are they going to remain at higher interest rates, and then when are the cuts going to come eventually. This inflation data could give you at least a little hint as to when that may happen.
Sam, in context of that, how are you viewing the oil
So
story?
like we're finding new buyer as well.
You're quite right to put it in the context of inflation, because I think at the moment
Price can drop very quick.
and at the moment there are hedge funds now
Just sit on hands.
where the oil price is going to go. There's kind of this underlying threat to inflation coming back down again. We'll see where that goes over the course of the next couple of months, but yes, certainly it appears that oil prices, today a little bit flatter, still hovering around that $90 a barrel mark. It could pose a little bit of a threat.
It was interesting, our guest earlier agreed with the assessment that you've made a few times on this programme, Mark, which is that you always look at the oil price going higher and you ask questions about whether that takes us higher on inflation, but he also thought that this, in the end, will offer some kind of deflationary impulse to the economy.
Yeah, I'm with that. So actually, this is deflationary, just disinflationary, in terms of the impact on the consumer will be more negative in their spending power over the next couple of months than will be inflationary. If you want to be really extreme, it's slightly stagflationary, because of course it is higher prices at the top end, but I think the growth impact and negative is more
But
negative.
before we get there, does it maybe push oil prices up in a sort of just mechanical, mathematical way for a short period?
Absolutely. I also like the fact that, Anna, despite the fact that my brain has been switched off all show, you managed to find the one win I had in this show. I love it. It's brilliant.
Excellent. I'm pleased you're pleased. But coming back to you, Sam, around the focus this morning. I mean, we're watching the auto workers strike in America with a great deal of focus. It's one of a number of issues that are really sort of unknown at the moment about the US economy. But we have had some better news in terms of the getting back to normal, at least, on the writers' strike in the US. What's the
Yeah, and I think we were kind of just talking at the moment before the cameras came on that the auto strike is a much larger one. Certainly in terms of the supply chain, the number of people involved. But the Hollywood strike, it's only one part of it that they've reached kind of tentative deal on, the screenwriters part of it. But there is a huge amount of industry that goes around this. I think actually that later on we may see a move in Ashtead shares, for example, in London. A company that rent industrial equipment. And because of these strikes, they haven't been doing that so well in Canada. It's actually a big part of their business. And then you'll see maybe some news at Disney and Netflix. It's a big deal. It's resulting in a lot of TV and film production shutting down.
Yeah, and I wonder about cinema chains, movie theatres, because we've seen a number of releases delayed as a result of an inability to effectively promote the film, basically.
Well, and you just had a really successful couple of releases with the Barbie and Oppenheimer films, and then the pipeline has then, not dried up, but it's been delayed. And so, yeah, for cinema chains, which have struggled a lot, of course, during the pandemic, this could be a good story.
And it's interesting, we talk about the energy input into inflation, and now we're thinking about the wage input as well. And that is something that certainly policymakers are going to have to reflect on stateside with the UAW. I mean, they're asking for upside of 30% and 40% in terms of the wage. We don't know what they're going to land on, but they've rejected the 21% or so that's been offered by some of the automakers. So the stickier wages as well. And that this is potentially a 3-year deal. So that locks higher wages in. Good news, certainly for union members,
yes.
The consequences in terms of higher stickier wages.
Yeah, and certainly that is much more consequential from the
And
outside.
there's more ideas on the short trades for today.
From the Hollywood side,
At least we will
go.
go
The actors are still on strike.
to 8:20 and then
that part of that.
let's see.
Okay, yeah, important detail there. Sam, thank you very much. Sam Anstey from our Markets Today blog. With plenty of the stories that they're covering on the Bloomberg, on the Markets Today blog, but you can find that through the Bloomberg UK website, or you can type TLID go onto the Bloomberg terminal. Let's get some individual stocks on the move. Joe Easton joins us from our equities team. Joe, we just got a heads up on a couple of stocks that could be on the move as a result of the Hollywood news, but your focus elsewhere.
Absolutely. Morning, Anna. So we are getting news of SBB in Sweden, the big real estate company, potentially getting a $720 million boost as they look to sell a stake in their school building to the Canadian Brookfield. Now, this is the first boost for the CEO that came in June and is tasked with handling the company's $8 billion debt pile, so it could potentially provide some relief. Now, this is the worst performing stock on Sweden's OMX this year, down 82%, as we can see from the screen here. And it really is reflective of the entire troubles of the real estate sector around Europe and the world as well. But Bloomberg Intelligence noting this morning that this is only potentially a short-term boost because there is still a long way to go if they are to tackle their debt servicing costs, but a minor relief for the company for sure this morning.
Joe, good morning. About a month ago, Italy announced this controversial windfall tax on banks. It caused a lot of fuss at the time, not just because of the move, but also the way it was kind of announced. Now there's a weekend development which might be underestimated by the market. I mean, Valerie suggesting that maybe this is kind of good for PTPs if there's kind of a new get-out clause that forces banks to buy more bonds. Tell us what the story is, what the development is, what's your take?
Just potentially another watering down of that news, Mark. The reports of the weekend say that some banks will avoid paying this tax if they set aside more capital for a rainy day. However, if they then use that money to pay dividends and buybacks, it will then be taxed. It's also going to be potentially capped at around 0.3% of the bank's risk-weighted assets, according to multiple reports of the weekend. Now, there was a note from Citigroup a couple of weeks ago, and they said a measure like this that we're seeing announced potentially at the moment could reduce the impact on earnings from around 10% a year to around 5%, so a significant reduction in the earnings impact. As we can see, these stocks remain significantly higher this year, given the benefit of those higher ECB interest rates and the big payouts that the companies have been doing. So there's a long way to go until they raise their gains for the year, potentially, as I say, a watering down of those measures at the moment.
So Joe, from banks to gambling and online gambling, in-person gambling as well, Entain is a bit of a gauge in terms of how much appetite we've had for gambling over the summer.
So Entain, Tom, a bit of a surprising profit warning, it looks like to me. They're citing regulatory headwinds in the UK, slow markets in Australia and Italy, and saying that they expect their pro forma net gaming revenue to be down by a single-digit % for the year ahead. This is the UK's largest online and in-person gambling company, as we say, with Flutter as well, the big rival today. The one thing that traders are pointing to, however, is that the overall headline pre-tax earnings guidance is reiterated, so there is a bit of strength in there, but definitely negative. They say that they will review some of their businesses and look to focus on the higher growth units and also their structure as well. So clearly they are seeing some issues at the companies. We can see Entain actually underperforming. They did a bit of a capital raise recently, and this is potentially negative at the moment for that one.
Okay, Joe, thanks very much. Equities reporter Joe Easton with a full briefing on some of the stocks that could be on the move. Mark, just a few minutes then until the start of trading, and a focus on commodities perhaps, because it has been such a story. As you said a couple of weeks ago, we were watching oil take out these sort of $95 a barrel mark on Brent. Then it sort of paused. Now we are seeing a little bit of upward movement, contrasting that with iron ore, which is actually down by 3.7% this morning over in Singapore.
Yeah, since we started the show 53 minutes ago, oil prices have got look a bit more perky. Energy prices, UK gas prices are a bit higher. And in fact, even iron ore is pairing its kind of losses. So I think we're still seeing that dynamic we've talked a lot about in this show. The idea that there still seems a market that wants to bring oil prices higher, whether it's the hedge fund positioning out there, whether it's the fact that we've kind of had this market that seemed really extremely overbought and excessive, and yet we've gone nowhere the past week. We have not withdrawn. And so this is a market that might consolidate for a bit longer, but it feels like the next move is still higher.
So we get the cushion data out later this week, which we know is going to be really consequential for these markets. Are you convinced by the argument that this is all about supply rather than demand?
I think it is mainly about supply flow, and I think that the backwardation of the market shows that. You know, it's people clamouring to get oil at the front end because they just can't get the supply through. But if it was a real demand move, you wouldn't see such an extreme backwardation in terms of that you'd expect the long end of the curve to also go higher. So yeah, I think it is more supply. But it's interesting, we also talked in the show, this story that Anna highlighted about the stimulus in China adds up to more than people think. And so maybe there's just more real demand coming through from China than people underestimate.
Well, that's really interesting as well, given the story on Bloomberg today about the number of flights that people are using as a national holiday. So like 21 million, the population of Australia. So just a reminder that domestic airline potentially for oil. Coming up, of course, UBS says it is working at full speed with the integration of Credit Suisse. We speak exclusively to the CEO, Sergio Armotti, and thank you, of course, for Mark for walking us through the key market themes this Monday. The Open is next. This is Bloomberg.
Still open of London, still not interested in anything. We're just stalling here.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and you keep at it and don't quit. It's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very active because you learn every day. And to keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
Do they sell when the prices go down?
Yes. Or yes, not keeping. But people have conviction. Or they invest for the. If they invest for the right reasons, they just keep at it.
Slice through the noise, forget the noise, ignore the noise.
So there's just going to be noise.
There's noise.
It's noise versus signal. Now, more to the point.
What is the lesson for the observation?
Welcome back to Markets Today. I'm Anna Edwards in London with Tom McKenzie.
And here are the top stories. Chinese public stocks drive Asian benchmarks lower. Evergrande cancels a creditor, limiting US Treasury yields climb amid ongoing concern over a possible government shutdown. The EU's trade chief warns China the bloc will be more forceful in upholding fair competition. Plus, troubled Swedish landlord SBB gets a $720 million cash injection from Brookfield Asset Management, making the Canadian investor the majority shareholder. So, Anna, we're looking, of course, ahead to some data out of the Eurozone and the US later this week. We're watching oil prices, watching iron ore prices, but the softness certainly coming through from Asia.
Yeah, absolutely. Softness from Asia, and specifically from China, actually, because Japanese stocks going higher as a result of the weakness of the yen. This is all post-BOJ Friday, but that's not dominating the overall Asia theme. MSCI Asia Pacific moving lower as a result of weakness in China, down another 0.4%. Nasdaq futures, though, pointing higher, up 0.3%. We'll keep an eye on Apple in particular, the launch of some of its new products, just hitting the showrooms and people getting to use them for the first time. This is the oil price. We talked a lot about this last hour, up by 0.7% this morning. We'll focus on that cushion data top later on this week. And iron ore down by just shy of 4%. I focused again there on the weakness in the Chinese story. Do we overstate that? But that seems to be where iron ore traders are focused this morning. And also perhaps a lack of stockpiling of iron ore going into some of those important holidays in China.
And that story may tie into why we're seeing the biggest losses being found by those futures on the FTSE 100, pointing lower by 0.4%. Slightly less negative picture over in Germany, but still downside.
London open and
still nothing. 28 points.
Okay, so expectation then from the futures picture is that we'll see a bit of weakness at the start of the European trading day. Not getting much of a clue in terms of risk appetite from the FX markets. It was there just a moment ago. There it is. Euro's pretty flat. The dollar's pretty flat. The pound also pretty flat as we go into another trading week. And as we were discussing last hour, last week we had a lot of set-piece central bank events. Yes, this week we've got data, PCE inflation data, European inflation data. All of that will be really important, and the oil reports. But maybe a few more unpredictable elements to keep in focus. The shutdown conversation, the strike conversations over in the US, even if some of those are being resolved at the margins. This is what we see then for European stocks, down by 0.4% on the Spanish IBEX. The French CAC 40 also down by 0.4%. The FTSE down by 0.3%. So actually not seeing much of a divergence around the commodity story. Weak iron ore will weigh on London, but it seems to be kind of in keeping with the rest of the markets. The German DAX down by 0.3%. This is the picture then for the sovereign bond markets. We're selling stocks, we're selling bonds. We've got a little bit of strength coming through in these yields. Mark was flagging the 30-year Treasury yield to us earlier on. And I mentioned the weak iron ore price. Well, that certainly is not what is showing up on the commodity space. Just as Mark was talking to us, we're seeing a little more strength in the oil price as we go through this morning. We focus on the data on that front this week, and a bit of strength in natural gases. And perhaps that is weighing. All of that commodities green is outweighing any negativity around iron ore for London then, Tom, in terms of the stocks trade.
Well, we're breaking out the energy story then. The energy sector is currently down 0.2%. The basic resources is taking the biggest hit across the major sectors as a result of the softness in that iron ore price. So basic resources as a sector currently down 1.7%. Energy off by a little marginal kind of 0.2%. And we continue, of course, to reflect on the hedge fund positioning around oil and, of course, the cushion data we're getting out later this week. Other big movements coming through across the sectors. You're looking at downside in terms of travel and leisure of about 0.8%. The auto sector taking a bit of a hit as well, off by 0.6%. And retail also low by around 0.5%. So every major sector in the red this morning, so that negativity permeates through these sectors, but it has been more pronounced across retail, basic resources, trade and leisure down than 1%. And again, across your benchmark, European stocks is off. Currently in the session, early days, of course, by 0.3%. There's some breaking lines crossing now around Amazon and an investment. So switching focus to technology, investing as much as $4 billion in the AI startup Anthropic, which is based in the US. The line coming through that Anthropic will use that Amazon investment and Amazon chips to build and train AI models. Amazon partnership with Anthropic will boost generative AI efforts. So we know, of course, that Amazon has AWS, the cloud data and cloud services, cloud center, data centers, part of the business, so important for Amazon in terms of the revenue driver. And of course, they have their own chips. They're now partnering with Anthropic, which was set up by some previous executives, people used to work at OpenAI. OpenAI. Previous investment for Anthropic has come through from the likes of Google, but also Alameda Research, which was linked to Sam Bankman-Fried as well. So slightly more controversial funding on that front. But the Google backing is important, and now the Amazon backing as well, to the tune of about $4 billion US. And the competition around generative AI really starts to heat up.
Yeah, absolutely. And I think Amazon was seen as a bit of a laggard amongst these big US tech players on the AI front. So interesting to see this announcement from them today. Tom, let me take us to the Swedish property sector, where we have some movement on SBB. We mentioned this, Jovisa mentioned this in our stocks to watch this morning, and it certainly has proved itself a valid stock to watch. SBB gains as much as 38%. You can see it up by 37% in session today then in Sweden, as the business gets a $720 million investment from Brookfield. So they've taken away, they've got that money from Brookfield, and they are, as a result, in a much stronger position, it would seem, on the balance sheet. That's what the market is concluding, and the stock goes higher today. Interesting, as I mentioned earlier, to see that the central bank is being asked about this over the period of last week when we heard from the Riksbank, and they were saying that there are, of course, the ones that are in the press for distress on their balance sheets, and then there's the rest. So we'll see how this story develops from here, whether this is ring-fenced sufficiently. Sam Alstead joins us from our equities, from the Markets Today blog, of course, to take us through some of the stories that you focus on. I was too focused on SBB there, Sam, but now let's turn to other matters, and in particular the pound. Really interesting story and commentary over the weekend, talking about how the pound, a year ago was really beaten up by the Liz Truss administration, the after effects of that so-called mini budget, that sort of maxed the effects on the currency. And now the pound perhaps finds itself a little under pressure again. What are you watching?
Yeah, so I mean, you mentioned this morning the pound's sort of flat this morning, but it's flat and hovering around those kind of 6-month lows that we hit over the course of last week. As you say it over the weekend. It was the anniversary of the mini budget, and now you're seeing a lot of bets coming in on the pound to fall even further because the Bank of England has gone on pause. That is refocusing everything on the fundamentals of the UK economy, and they don't look too rosy at the moment. And so there is a lot of bets going in that the pound versus the dollar is going to be a winning trade.
Yeah, watching the next level for the pound then, as we weigh up the downside coming through for this economy. We're also looking at a bit of this controversy once again swirling around the Prime Minister Rishi Sunak here in the UK, around how he's thinking, how his team are thinking about investments in rail infrastructure.
Yeah, and HS2 in particular, HS2, I mean, a conversation topic in this country for I don't even remember how long. I think it probably is actually very close to that. Yeah, you're quite right. This is actually coming up as well to the party conferences over the course of the next month. So the sharpness of the criticism is likely to increase a little bit as you go over the course of this month with an election likely next year as well. And certainly, the initial indication appears to be that they are at least considering walking away from a part of that line. And there's actually some criticism out this morning already from, I think there was a lead in the Times, I believe it was this morning, from George Osborne and the Newcastle Time, criticising that decision.
Yes, there's a lot of kickback against it, and we're heading towards Tory party conference, basically heading towards all of the party conferences for the UK political parties. What are we expecting from the UK, from the Labour side of things? If HS2 is going to be one of the focuses for the Tories, what are we expecting from Labour?
I think you're expecting a very different Labour Party to the last couple of elections. The last couple, led by Jeremy Corbyn, very different kind of view towards business and very different noises made towards business. Their party conference this year is going to have a lot of major companies, major corporates there. The British private equity trade body is going to be there, so it's certainly a very different pitch from Labour this time around.
I love the headline in the UK's Labour Party swaps Mao jokes for business charm offensive, and so that is what is expected to come through at that party conference. Sam, also thank you very much for walking us through some of the key things to be watching with a particular lens on the UK, of course, from our markets today. Tim, more from the team on the front page of the Bloomberg UK website.
Yeah, look like that. Today it won't be the best day to trade.
The stocks on the move, and Joe, you put some big ones, Joe.
So these gambling stocks are opening lower in the UK and also in Ireland as well. Entain now down around 4%. They do warn of a weakening in some of their gambling spending revenue over the summer, and also particular weakness over in Italy, notably. Jefferies analysts saying that they will cut earnings estimates by around 10% for the next 3 years. We've seen read across over on Flutter as well in Dublin. Now SBB, as we said at the open, they're absolutely rocketing earlier, up 28% now as they get this $720 million cash injection from Brookfield over in Canada. They do have around $8 billion in debts, as we said, in stocks to watch, but this is a big boost for that stock, clearly, as we see on the screen here. In terms of the high-speed 2 rail issue that Sam Umstead was talking about there, this is a negative for Balfour Beatty. They make this railway with Vinci over in France. Vinci is a much bigger company. Balfour has a market cap of around 1.5 billion, and it's an important project for them, and that stock is slipping around 1.3% after reports that Sunak could be looking to shelve the northern part of that line, the part that goes between Birmingham and Manchester, a negative for that building company this morning. Then we'll have a look at some of the mining stocks, all deep in the negative there. This, of course, coming from the news of iron ore futures slammed over in Singapore, down 4%, a massive drop, adding to an 8% decline from last week. So Anglo-American and also ArcelorMittal, the two here, those ones are some of the biggest producers of the metal and among the biggest funds that we're seeing read across that sector this morning. Then on the ratings changes, Bank of America swaps Gucci handbags for Charles bracelets. They downgrade Kering, becoming the only broker with a sell equivalent rating on that stock. They say that Kering has become a cyclical stock because it's so exposed to aspirational buyers, the Gucci brand, and they're warning there that that stock could start declining soon. Pandora they like, given the valuation, and they say it's showing a bit of strength in some of their sales at the moment. In terms of Ubisoft, this one is upgraded over at Exane BNP Paribas. Interestingly, they cite the Star Wars game that's coming out from Ubisoft. They say that's the boost there. So the forces with that stock this morning. And AstraZeneca, this one gets an upgrade over at Jefferies. who says that the cancer drugs are strong, but the non-cancer is also positive as well. The asthma drugs boosting the stock. They upgrade their earnings estimates and lift Jefferies on AstraZeneca to buy.
Joe, thanks very much. Joe Easton from our equities team with plenty of stocks on the move this morning. Let's get a briefing on what's coming up this week. Today, we'll get Germany's IFO Business Climate Survey, so that's going to be a feature of Monday's trading session. Then on Tuesday, US data, including new home sales and consumer confidence, will be released. On Wednesday, the French budget for 2024 will be unveiled. President Emmanuel Macron has promised to find at least 15 billion euros of savings to cut the deficit. We are expecting him to make some comments on green issues today. On Thursday, we get a barrage of inflation data from several European countries, including Spain and Germany. And later in the day, Nike earnings will be coming out, so watch for any recross into other listed sportswear makers, for example, the likes of Adidas. And on Friday, the Fed's favourite inflation gauge, PCE, will come out. So Tom, a real focus on inflation then at one level with the European data, the US PCE data. We're going to get some central bank speakers as well, trying to add their steer, I suppose, on what we heard last week. And as Mark was saying, quite difficult to draw fixed conclusions about last week from all of those central bank meetings.
And some more volatility then in the docket or in the cards around the treasury markets as well. Interestingly, the Bank of America says the 10-year yield could get to 4.75 and peak out there. Of course, that debate remains live. So in terms of how much more selling pressure is going to come through, particularly for the back end of the treasury curve, and maybe some of those Fed voices and inflation data will help give a little bit more clarity. Coming up, UBS says it is working at, quote, full speed integration of Credit Suisse. We'll speak exclusively to the CEO, Silvia Motti. That's later in the show. This is Bloomberg.
Okay, I will try the breakout trade. Now is a question if we can break the 31 and stay above it.
RSINQ small, break of structure YM.
Hi Koltun, how are you?
Hi, Sir Texas. Very strange session. I opened small short, but I took TP1 now, and I don't have huge hopes for it.
I have all. I'm in all along.
After we reach like 37 area, I'll be looking for the shorts.
Okay. Well, I'm looking to see if we're gonna. I put the 940 as if we break it, and if we don't, then short at the 940.
Yeah, I've got an 38.78 is the end of the longs for me.
Okay.
There was a lot of information we need to collect. We will not be satisfied that we are where we need to be until we see inflation confidently. We're confident.
So let's see.
Yeah.
But we are quite choppy. This is the area where actually I should
Yeah,
look
it
for
really
the short,
is.
but I don't want to go again, still I will see the confirmation that I should go short.
But we're in the expensive zone. I got in at 9:11.
Okay.
So just 5 micro. I went ahead and tried minis to try to recoup on Trader on Top Step, but nope, didn't work. I just cannot. I can do 10 micros, but I cannot do one mini.
Okay, that's good. Actually, it's better.
Because I sell along the way with a mini, you can't sell anything.
Yeah, that's true.
So yes.
No, it's like.
So I earned for myself at break-even.
I should actually look at 9 when we was at the. I took the TP from my short at 9:08.
Oh, okay.
I should take the long there, but I didn't want to trade the chop. So.
Right. Okay.
That's okay.
Well, we were into the 4-hour, and I'm still doing looking at the market structure, the 3-minute chart, blah blah blah. That's what I'm still doing.
That's good.
You know, that heat map, I don't get it. Like, I took it off my car.
It could be too much information. Sometimes can be very dangerous because got too much information. Maybe the next TP at 47 if you will manage to just for some reason to go there.
I was actually just gonna let it run because I only did 5 micros.
I don't have a huge hopes for this to run.
I was gonna tell you. So I was back testing. I was telling Adam on that. I was back testing the 1-minute chart with a 3-minute chart with the market structure and the pullback.
Yeah.
But I have both algos, both of them, and then I have my evidence lines, and his new candles. I'm at pretty much it. So I've noticed that price goes to these storylines.
Yes, I noticed this much earlier. It's like whenever you create the new storyline, then it's going back to the old storyline.
Yeah. So the only other, we already did the other one, the one that finished on Friday.
Can you repeat
and,
okay.
We only have one more.
Yeah.
And it's really high. It's where is it? It's at 382.
Yeah, but they can create the new one now, slightly higher or. Let's see.
So right here is where you took a short right now?
No, I should take a short, but I don't want it. I really want to see what will happen in this area. I don't. I'm still in my long, one contract left, but I've got the stop loss at 28.5, so probably taking shortly.
Okay, so first of all, we are saying ECB will take the reference rate to 350 next year, which is lower than where we are now, but it's quite high in historical terms. So I would say the first thing, take stock of the fact that Eurozone can expand even at much higher interest rates than before. Second thing is, in the very near term, I think the manufacturing sector is going to actually improve in the next few quarters.
Yeah, I'm out.
You're out?
And I will open a demo trade short.
Investment is really important. Don't forget that the European Commission has an enormously ambitious target to raise investment spending in the EU in order to finance all of these transitions that we're trying to do. So if you're going to raise investments, you definitely need lower cost of capital. You definitely don't need a recession.
Okay, so the focus on
The stop loss for the short is at 44.25.
looking at something that is really interesting on the consumer side out of Germany, Raphael. I saw some headlines today talking about the German house prices falling. There's
Soon as I change my mind, the price going the other direction, but we are quite overbought, so we will do it.
When do you see any kind of turnaround for German data on any front?
Well, I think Germany has a structural growth problem, so I think people shouldn't completely put the same basket. The news on that was from Germany. Germany
So let me see, where are we?
In manufacturing, if I'm correct, that Chinese stimulus is going to feed into European data, the B2B in the first part of next year. German manufacturing will show that.
It's really slow today.
I was expecting that today won't be the best day to trade. We had a
Really?
massive drop last week and price need to stabilize now. So the next 2-3 days it will be probably like that.
Do we have any reports or anything from anywhere coming up?
Not today. There will be tomorrow, but it's not very. The consumer confidence is tomorrow. Wednesday is almost nothing, and Thursday we've got GDP and unemployment claims. Even data is look like it will be working that way that till Thursday nothing will be happening.
Crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
I will open this normal account.
Okay, so you're moving in on your quick, starting with your fancy hands.
The reward is much bigger than the long.
The what?
My salary reward is much bigger than taking a long here.
Oh, okay. So you see this dropping, what are your, because I know last time you put something like it was working out, like your chart.
Excuse me?
You still fit, was it you or GRK? About the drop?
It was me, and I got like my head and shoulder pattern is working now.
So how far, do you think it's going to go further than where it did on Friday?
For me, okay, Friday we just stop at the very nice level for the bulls to show up. If we will go below the Friday lows, the TP are 14,450 and my final TP is 13,700. Yeah, but so
14,450 and what?
And 13,700.
Oh my god, that's super low.
Yeah, but so far.
So what level does it have to break?
Excuse me?
What level do you have that it thinks it would break?
This is the TP from the fib lines. So the golden zone for the bulls from the fib lines. If we want to go higher, I think we should go there first. But yeah, let's see. It's so far I am in like a very small contract on a forex account, short from last Monday.
Oh, okay.
And that's going quite well. I'm happy with it.
Okay.
The company has agreed to sell 1.16% in the education division to Brookfield, a deal that would get SBB
So 12, 20 would have been 32.
Charles, good morning. Thanks for telling us this story. So what do we know about the deal this morning?
Hi, good morning from Stockholm. Yes, SBB has...
Or on the old algo on the dashboard, when it says price session is bullish and price action is reversal, what is that?
The overall we are bullish, but we will drop lower to just grab the liquidity.
and in turn hopefully improving the overall credit profile.
And when it says pullback,
It means we are bullish, and as well we going to pick up some money to go higher.
Okay.
And the broader property sector in Sweden, how much of an uplift does this come through? It's the corporate, but also the broader sector.
Yeah, I mean, obviously the equity investors are showing news this morning with showing badly. But I think it would be wrong to say that.
We're gonna prove it against.
It has
That was like 5 points net profit.
Mhm.
Now I only 1 point.
Yeah, I saw it.
And it needs to find further equity partners such as
I didn't get that. Oh, I don't know why I didn't get it.
As for the wider property sector, I think you're absolutely right to flag SBB as a poster child for this crisis. All I can say is I think it will probably have a good signalling effect for other companies in the sector, but to say that the broader industry is now on a path to recovery, I think would be kind of short.
Okay, Joel Daly, thank you very much for being with us when it comes to SBB raising some capital. So a little bit of relief coming through. The stock is up strongly. And we'll be looking at lines as well. China's reaction to this EV probe by the EU, and of course, at a time when the Trade Commissioner is on the ground in China.
Yeah, absolutely. So Valdis Dombrovskis, EU Trade Commissioner, visiting, making these comments about de-risking, not decoupling, but all of this coming under the cloud of the recently announced probe by the European Commission into EVs, and we're getting these lines through from China.
Going back now.
Saying this morning that the EU's planned measures on EVs are not in anyone's interests.
Also one of the popular lines as well when it comes to the European Central Bank. Just very briefly, we've got data coming out later this week around inflation from the ECB. Here, Bank of France, but also a governing member of ECB, saying the ECB should focus on persistence, not pushing rates up.
Okay, coming up, UBS says it's working at full speed with the integration of Credit Suisse. We'll bring you on exclusive conversation with the CEO of UBS, Sergio Motti, speaks to the program. We'll bring you that conversation. This is
It looked like the sell, the bears was exhausted, they couldn't push the price lower.
I'm just gonna move to break even and 912. I just want to see if it's gonna stall at the 940.
I'll be back in a sec. I hope so. I'll be still in that rate. My stop loss is at 45.
Okay.
I don't have a clue what for the price is waiting for really. Okay, the RTY try to go higher, trying to go higher. Alexa, stop. The same with the YM. So it looks like we're trading higher.
Post-war Ukrainian recovery.
Dollar not doing anything. was flying of that? Up and down.
This is Marcus today. We're 30 minutes into the Euro.
Alexa, play Bloomberg.
Watching Bloomberg Europe.
What's it coming?
Line still green.
Just taking into the green right now for European stocks. And if you look at the benchmark right now, it doesn't tell the full story. It looks pretty dull because it's flat. With the previous picture, of course, you take that into context in the sense of the downside that had come through at the start of the year, 30 minutes or so ago, you're down about 0.3%. That has turned around, so we'll unpack the catalysts around that. But that is counter-pricing gains of just 3 basis points. The FTSE 100 still in the red, down to about a tenth of a certain basic resources because of drag there. The banking sector, though, is coming through with a bit of a lift. Very modest, of course, these European stocks. But let's have a look at how the sector breakout is shaping up then, around 30 minutes into the trading session. And as you can see, the banking sector is one of the sectors now in the green, getting about 0.6%. Industrials are getting just a 10%. Retail is flat.
Let's see.
The pressure still, of course, coming through the basic resources down 1.6%. But broadly, on the benchmark, that's not telling the full story. That has been a bit of a turnaround in sentiment. It's very modest as it is now.
Yeah, absolutely. So sentiment improving a little. US futures pointing a little higher, and 0.4% on Nasdaq futures, for example. Let's step away from the immediate moving markets to the bigger picture, consolidation in the banking sector. In fact, UBS Group CEO Sergio Ermotti says the business is making good progress on the Credit Suisse integration. And he stands out as John Liu, Bloomberg is managing editor for Greater China for a wide range of interviews on his first trip to Beijing since taking over the US.
Phone line.
So far the long. If I will stay that long, that would be much nicer trader. What I try to do now, but yeah, the risk to reward is much better from the short.
That's one of the reasons I'm also here today in Beijing, because this is my first trip to Asia since taking on doing my role at UBS, and I think it's very important for me to reach out to all the Chinese stakeholders and reiterate our commitment to China while also updating them on the integration.
So, do you know that here in China, UBS has a securities venture?
Can we change here?
It seems to make sense to sell out of the Credit Suisse venture. Is that something you're pursuing?
Well, we are currently evaluating the best.
Can y'all hear me on this side? On this side?
Yeah, I can hear you.
Okay.
Operations, but we need to really understand exactly how to do that. We are very happy with our historical
Okay, VIX is dropping.
operation here in China. We were the first to get the license as a foreign.
Everything except the VIX and dollar is green.
So that's
Strange.
very important.
Does this say that we broke the level or not yet?
How we need to exactly.
Oh, we'll break out X.
What to do with the CS.
Let's see if the breakout will work today.
How far have you progressed in that process? Are you looking at potential buyers? Are you talking to anyone yet, or is it not got to that?
At this stage, we have to examine the situation.
In the second quarter results, you mentioned specifically that clients
So far, very big rejection.
activity here in Asia was muted.
Yeah, we got a
Are you
rejection.
still finding that's the case?
Down to the white.
But it's from 46 and we are still above 40.
Across the globe, also in Asia, in terms of climate activity. So the most important topic for us was to see returns of assets that left Credit Suisse in Q4, Q1 this year. We started to see assets coming back to Credit Suisse in
towards the end of the second quarter. We see also very good momentum in Q3. So that's the most important issue. But also in general, it's fair to say that investors are...
Okay, I'm short again.
You're short?
So
Yeah.
momentum we talked about in Q3, there was net new money inflow of about $16 billion US.
I've got a bearish divergent.
You said at the time you expected that to continue. What is it looking like in Q3? What is good momentum? Well, I mean, we are pursuing similar patterns, so we are not going to be specific on numbers, so the quarter is still ongoing. But the most important issue...
Except all of the weeks are showing long, so that's a small problem.
Forecast being confirmed, and we are very
5 minutes which is still red, but 1 minute is green.
Encouraging to see that so quickly our plans are responding to our actions to stabilize Credit Suisse and to offer them the best.
Koltun,
Yes.
why wouldn't you consider this a pullback on a long?
It's too small. This is what I think. I don't expecting like a huge reaction. As well, the short. If you will drop for the short, my TP will be. If we can go up to 70, that would be nice. But ideally,
Where?
70, 487.
Oh.
And then we can go higher without making the new low. Otherwise, we will drop to 23. But we are nice and bullish now. I'm not complaining.
That was at, we did touch that during Sydney at 7, well, my time 7:30.
Yeah. Yeah, this is what I'm saying. If you will go there and do not break the below, that will be good. Yeah, but so far the short working well.
Yeah. You're up 10 points.
Almost. 35, I will have 10 points.
Your employees here in China, your regulators here in China, your clients, partners ask
So the 32, not 35.
for more investments. What are your plans for China as part of the new UBS? How do you respond? Well, we responded to being in China for 30
Come on. Yes, done. 10 points.
China and to make the substantial investments, and is exactly the reason for my visit is really to be to reiterate our commitment that we see China as an important driver for growth.
Well, I can see that I could hold my longer much my long bit longer. It will give me a nice TP.
Break of structure and key.
Recently, there was a Bank of America survey of global investors that identified Chinese property as the thing that people thought most likely could cause the next global credit event. What is it like for you in terms of this? Well, we know that almost...
My first TP, I didn't take a 10 points. My first TP is at 20.25. It's only 2 contracts, so...
I think it's quite clear that the situation in China is fragile around the real estate sector. The government is taking actions to contain...
The good thing for the bulls is the price is not accepting me in my
difficult situations.
bearish area. For me to be bearish, we need to drop below 28 and stay there.
It's taken your headcount, your staff, to about 120,000 globally. And you've talked about, pretty forthcoming about the need to reduce that number. How much of a reduction do you think is needed at the end of the day? I never really spoke about the need of reducing headcount because it's not my
It's not our philosophy. What we need to do is to restructure the bank. Credit Suisse needed to be restructured, profoundly restructured because we out of the situation, and then we need to extract the synergies that are necessary to make both businesses viable and stronger. So we are taking actions as we speak to resize the business. We are also taking advantage of the fact that we have a natural rotation that is helping across the globe. We have demographic trends helping in that sense. People exiting the bank to retirements or early retirements. We are working also in facilitating movements of people within the bank, also between the two banks as we speak. So I'm confident that we can mitigate the painful part of the job, which is the social cost. It's very necessary in order to create a business that is sustainable.
That, of course, was UBS CEO Sergio Motti speaking to Bloomberg's Don York in Beijing a couple of rounds crossing them from that interview just on his views around China. UBS has very limited direct China
Oil
property
tried to go higher. Gold had an amazing rally.
positive views on China in the long term in terms of the potential there, and also addressing the question around those assets. Of course, linked to Credit Suisse, saying that there has been some progress there, but almost impossible to get back all of those assets.
It's really interesting that he makes this visit at all, isn't it? Because as John was saying, he was asking, trying to probe his views on opportunities.
Dollar going up.
To China, I suppose, by this visit, because this
That's
is
a strange setup today.
really busy doing other things with the Credit Suisse integration, but he says there's still opportunities to grow, and some of that coming from the US, some of that in Asia, specifically in China. So that recommitment and that appearance in itself news, I suppose.
Very diplomatic in his language, of course. He's absolutely right. They have been there 3+ decades, and they were one of the first banks to get licenses around securities business in China. So they're kind of ahead of the curve on that front. But clearly, it's a challenging operating environment. But as you say, points the importance of that business for UBS going forward. Coming up, President Biden switching focus. We're going to hear focus on his visits to the auto workers, of course, on the picket line, showing presidential support for the workers and the union. Is that a thorny relationship, or is that a thorny relationship now between the unions and the US president? We're going to discuss that next. This is good.
And again, we've got a tired bears, then the bulls will be stepping in probably. Just keep thinking it's not worth really to trade this level. It's a nice level to short it, but at the same time the rejection can be quite fast.
can and will go all out if our national leadership decides that companies aren't going to move. The language of GM in particular are going to need some serious pushing. All of the parts distribution facilities at General Motors and Stellantis are being called to
What
stand up and
they
strike.
wanna do really?
We will be striking 38 locations across 20 states, across all 9 regions of the UAW.
UAW Union President there, Sean Fain, talking about work still to be done on these strikes and conversations with manufacturers. Now, President Biden says he will travel to Michigan on Tuesday to support striking United Auto Workers Union members. His announcement comes as
Didn't do anything and now we start the search. Very-ish. So.
Facilities after talks last week failed. It's an incredible number of production locations. Let's get to Bluebay's Oliver Crook, who can take us through the latest developments here, because this is being watched for the micro, what it does to the sector, but also for the macro, what this does to the US economy. And week passes then, Oliver, where are we on these
Dollar up
negotiations?
and VIX not doing anything. It's really just take a rest today.
Mostly against GM and Stellantis, and totally sparing Ford, saying that basically enough progress has been made there that they are content with that they're going to spare them. The question is, what actual progress has been made? We've got nothing in sort of the headline front in terms of the percentages for increases and that sort of thing. So what progress has been made in Ford? Well, we understand it's an agreement on reinstating the cost of living increases, inflation protection for paychecks, which was suspended in 2009 after the restructuring of the auto sector, and also enhanced profit sharing. So that's where we think we've made some progress. However, Ford did come out, but wanted to make the greatest amount of progress, saying there are still very complex and interconnected issues, and there's still significant gaps. If you look at what happened in Canada with the union there, they struck a deal with Ford, and they're going to take that model.
Remove one of the contracts.
In the US, they've taken on all big three.
And I go into profit stop.
Perhaps to diminish two, and maybe get an acceptable deal with the big three.
What is the political dimension here then, Ollie, as we hear about Biden's proposed visit to go and meet union workers? How do politics play into this?
Yeah, I mean, as you know, we have an election in the United States just over a year from now, which in U.S. political time is basically no time at all. And so Biden's saying, it was Sean Fain who called him and said, hey, come stand with us. And Biden's going to stand in the picket line tomorrow. And this is sort of an event without really precedent in U.S. history. Another event that perhaps does not have a great deal of precedent is the leading Republican candidate skipping the debate in order to give a speech on Wednesday in Detroit to, again, speak to the auto workers and try to woo the blue-collar vote. It's about Michigan, yes. It's about Pennsylvania and Wisconsin. These are states that have flipped back and forth. They went to the Republicans in 2016 when Trump won. They went back to Biden in 2022 when he won. And Sean Fain, throughout this whole thing, has really tried to stay out of the politics. There's that statement they put out last week saying, quote, we can't keep electing billionaires and millionaires that don't have any understanding of what it's like to live paycheck to paycheck and struggle to get by and expect them to solve the problems of the working class.
Okay, so the political tension runs on. How long could this go on for then, Ollie, when you look at the extent of the strike activity and the demands being made?
Exactly, so let's look at one of these strikes.
Okay, 24. Can we break that and go to 21?
But it's sort of back of the envelope. They have $825 million in the fund. We have $500 a week per worker. You have 18,300 workers striking. That's about $9 million a week. That could mean we're going for 90 weeks, right? So there's a lot of dry powder. And now they've only hit the the parts plants. There are still assembly plants for the Ford F-150, the Silverados, the Rams, the real profit centers. They haven't hit those yet. And remember, even with the expanded strike, that's only 12% of the workforce, so you still have a huge amount of dry powder going into what may be still the early phases of the strike.
Okay, Williams Ollie Crook with the latest in terms of the strike, the politics, and just how long this will all could run on for. Well, Ollie, thanks for the latest joining us, of course, out of Berlin. Coming up, Amazon making another big push to boost its AI presence. We're going to have more on that $4 billion investment in Anthropic, what it could all mean for Amazon, and the broader push into AI. That is next. This is Bloomberg.
I'm out of my shorts. The bears are tired again. We're holding on a top of 200. It's a nice area to go long now, but not taking it.
Well, I didn't exit. I'm still.
That's good, actually. That's good. I will too long here, but I'm waiting for the bulls really to show up. This they wanna go higher. We are on the top of 200. I close my shorts. I'm flat now. It's a rangy market, so I just trading few points here, few points there. Dollar start dropping. Took 15 points on the trade.
Let's see. 840.
Happy Monday, this is Markets Today. We are 53 minutes into the European trading day, and you are flat across European equities, airing some of the heavier losses at the start of the session. US futures pointing up around 0.4%. To technology now, Amazon is investing, will be investing as much as $4 billion in the AI startup Anthropic, bagging a crucial partner in its effort to become a major player in generative AI. Let's get the context now with Bloomberg's Alex Webb. Alex, tell us about Anthropic, tell us about how significant this deal is.
Now you're showing is even a drop.
I know!
Roster of founders who essentially were refugees from OpenAI. They left soon after the changes to OpenAI. This essentially constitution of OpenAI was supposed to be open for the world, and they started taking outside investors.
We've got a bearish divergent. They were printing a search. The bears are quiet, tired all the time after whatever they will do. But yeah, they're getting a few points here, few points there.
Alex, what's Amazon looking to get out of this?
Amazon has very much been seen as a laggard in this space. You know, Google obviously got strong AI chops through the Bard as their forward-facing chat model. They also have Microsoft as the big competitor in the cloud. They are very close to OpenAI, so they have got the first dibs on a bunch of generative AI stuff. Amazon did not, and so this potentially beefs up their capabilities in that space, which helps them when it comes to the battle for the cloud.
Alex, what does it tell us about the business model for generative AI? I speak to some people in this space and they talk about just how much is needed to build out the compute to underpin these models.
Big sell volume.
Changing the way that these different companies are looking at it.
It increasingly looks like it is a sort of piece of technology that gets companies to build their products.
That's NYM go. They're flashing.
Now you have something to encourage a company to build on AWS, on Amazon Web Services. Google obviously has been using its.
It's changing red on 1 minute.
And OpenAI gets people onto Microsoft Azure. That's where they make the money, right? On the cloud services, the processing cost of this stuff is high. You're not necessarily going to be paying directly for the language models, for the generative AI technology. You are paying for the compute that's needed to drive it, and that's where the likes of Amazon, Google, and Microsoft are looking to make money.
Okay, Alex, thanks very much. Bloomberg's Alex Webb with the latest on Amazon and what it's doing on the AI front. Really interesting. We'll get to the markets in a moment, Tom, but really interesting to see Amazon make this move. And it reminds me, just listening to Alex there, reminded me of some of the reporting and research I've been reading recently about when companies decide to go to use the large language models and use very general applications around AI, or whether it's going to be about companies that create specific solutions for them. Using AI tools, there's a lot we don't understand perhaps about the way businesses are going to jump on this trend.
Well, and how investors position around that, whether they do invest in those companies that are building out products on top, or the part of the models to invest in the models themselves.
We know what we can
as well in terms of the money flow around this space. Checking back on the markets then, for now, we're looking at European stocks Can't we just clinging on to the slimmest
Just waiting for the proof of it.
session, hasn't it? And in terms of what's happening across the commodity space, because arguably that's where most of the interest has been, at least so far in the session, a diverging picture when it comes to iron ore prices versus oil.
Yeah, absolutely. Stocks really flat. Nothing much to see in terms of the European story. US futures do point higher, but as you say, commodities in focus. We've got iron ore down by 3.8%.
My interest, level of interest, if we stay both here and there, we are bullish. The next move is there, but this is not trading area. It's very choppy. Protection. As you can see, we're just really consolidating here. And as a whole, I'm consolidating. I will see. So I'm not really, not now. I know. I wasn't greedy. I know I wasn't greedy. I was just. I see the black line. I think changing, closing. A bit more, but I'm not feeling bad about the decisions.
Bloomberg ETF IQ. Bloomberg UK, your source for news and analysis covering industries facing challenges, government, economy, financial services, and markets. This should not be a fantasy. It's a credible plan for the next 2 to 3 years.
I know.
These disruptive industry implications to how capital raising works.
No, we're having the perfect storm in the UK.
No, you want that details too. Business Authority.
We think there's much oil to be found in the lower 48 of this wondering, and let's say Alaska as well, or most of you know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere.
People have said that over time, and then we've always been surprised. And so the U.S. has been exploring more than other places.
Yeah, there is lots of buyers at 22 area, 20.
The other things that you haven't been able to explore is the story of the shale. The other one that continues to be a positive story is
Let's see.
Mexico, where really
They can break it this time or not really.
water depth, and then go down several more at the same time, large fields, and the Gulf of Mexico is still relatively underexplored. So I think there's still room for more discussions.
Pilot line of the 3-minute just changed screen.
That's good. Yeah, I was just saying that there is lots of buyers, and luckily I closed them, but as well we need to cross 31 now. And for me, actually I'm not trading between 940 and 920. I'm not touching whatever it's.
Okay.
You see, that was a nice big bullish candle and a huge rejection from 940, 931. Already 10 points in profit if you open the trades.
All thanks to those renewed concerns in China's property sector. Meanwhile, summary on the screen in shares of SBB after the troubled Swedish landlord gets a $720 million cash injection from Brookfield Asset Management. Plus, the EU's trade chief warns Beijing that the bloc will be more forceful in upholding fair competition during his trip to China.
that is your headlines. Take a quick check on the markets here. Take a look at the European markets now. Because already you are seeing a little bit of movement, but perhaps not the kind of movement that we actually want to see. A lot of micro moves is what I'm going to call them. The outperformer here is going to be the French index. Of course, you're seeing it higher by 0.1%, but the rest not moving much, which is interesting given that we are getting some German data as well. The September IFO Business Confidence Index coming in slightly hotter than what the estimate was at about 85.7. The estimate there at 85.2. You look at the expectation index, I would call it right on par at about 82.9. The estimate there 83.0 as well. And of course, the current assessment index 88.7. The estimate at 88. Now on the surface, it looks like some pretty inline data. But of course, we're going to get some real time analysis. We'll be speaking with the IFO Institute President Clemens Boyce sometime at 9:20 a.m. London time. What this all means, though, because of course the fear here is that do you start to see in these kind of micro pieces of data some sort of indication that Germany is, at the end of the day, going to be the sick man of Europe, dragging the rest of the continent and perhaps even the world with it. A lot of pressure on just one country. Let's see what the markets think. For more, joining me now is John Bilton, head of global multi-asset strategy over at JP Morgan Asset Management. John, pleasure to have you on the show.
Thank you.
Let's start with the data. What's your name of it?
Well, I think what it's demonstrating is that we've got some weakness going on in getting towards something which forms a bit of a base. I mean, the PMI data on Friday, which showed Germany still in depths of a contraction. So the issue I think that we've got is that is it starting to leak out more broadly in Europe, as you mentioned. There is some indication that France is starting to catch down to it. But I think what's interesting is over the course of this year, we haven't had that big sort of global slowdown that everyone kind of expected. Because it's kind of like a balanced pass from place to place. So while I think there are some concerns around Europe in general, that inflation is now beginning to come down. The ECB is probably at the same time, the US economy actually is looking as if it's hanging in there. So I think there's reasons to be perhaps seeing this more as a score draw than necessarily seeing it as being a big red flashy problem.
Well, the resilience is tricky here, right? Because when you look at the U.S. economy, you argue with the European data as well. We were supposed to be in a recession on the time about 2 years ago. That never happened. I might just be jinxing it. We'll see. But we turned to a recession this winter. It's all my fault. Let's talk a little bit about what's actually priced into the markets here. Because it's really hard to find a trade that works late cycle in an economic.
Actually, I can tell you, I don't have today this kind of the urge that I need to be in a trade or anything like that. It's quite...
That what?
I don't have the urge that I need to be in a trade.
Oh, okay, I got it. Yeah.
Like that. That's
I mean, I don't like this at all.
That's quite a good feeling. I feel good about it.
And before, I would have been flipping back and forth, you know?
Yeah.
I know that much. I haven't been doing that in a while, which is good.
A lot of the more defensive sectors, things like pharmaceuticals, other parts of the defensive complex, starting to get kind of interesting. Particularly now that we think we're coming towards peak rates. Inflation starts to fall, ECB at peak rates, into lower long-term yields, potentially could give it a bit of a boost to those defensive segments. It's not the same in the rest of the world, though. You look at cyclicals
every trade.
Actually, a little bit more support coming through for cyclicals, more scope for restocking. So perhaps a more cyclical tilt in the Americas, maybe a more defensive tilt in Europe, gives you a little bit of juice there.
How quickly does that defensive tilt in Europe get even more severe, especially as we're looking really down the barrel at $100 oil? We're looking at a conflict in Ukraine that's getting truly worse and worse, impacting suddenly not just the oil supply, but the commodity supply as well. Natural gas was very strong to begin with. Talk to us about how that thesis of resilience, the defensive play, falls apart.
Well, I think we've got to be a little bit careful with what we look at. If you look at the headline price of Brent, yes, I mean, high oil prices, if they go streaking upwards, it's a tax on the consumer. But for Europe, the most important piece is the natural gas price. And yes, we've seen some upside in terms of the front end of the natural gas curve. The contracts that are related there actually haven't really moved. So Europe's not facing the same very clear and present risk that it was this time of last year. So I think some of those fears can be taken off. Right now, we're facing a manufacturing sector in Europe which is going through a destocking cycle. Of course, very plausibly, companies decided to overstock in basic material, intermediate goods, etc., immediately after the invasion of Ukraine. And And those inventories take some time to play down. With a relatively lackluster consumer base in Europe at the moment, folks are very happy to sit on their excess savings, unlike their American counterparts, but that means that you get this lack of dynamism coming through in the economy. We think that the destocking cycle will come through at that point, actually a relatively clean slate to play.
Well, you're saying that the European Union and the European Trading Fund was kind of priced in this idea of peak rates. Quickly does that thesis kind of collapse? Again, given the commodity story that we're talking about, yes, the idea here is that inflation has come down a little bit. Has it come down enough to say that it'll stay down, or are we still subject to fuel costs or utility costs, etc., which will then, the ripple effect there be simply that maybe the EU or the ECB has to go even harder on inflation and turn that pricing in on its head?
Well, I think this is why we look at the difference between headline and core CPI. And of course, we've got the data coming through later this week. We think that the European Union will see, or the Eurozone will see the headline inflation come down below 5%. We also believe that if you take food and energy, yes, it can have a pass-through effect in terms of headline inflation. But again, I use that phrase as a tax on the consumer. The consumer who's squeezed, they're suddenly paying more for their household spending, more to their house, more to drive their cars. They're spending less on other things. So I think when we face, as we read many places, something that cost of living squeeze,
should be
a countervailing effect on core because it's forcing consumers to make choices. So we think the ECB will look through it. Worth noting that we had comments this morning from the cost suggesting that they need to have time for the impact of higher rates to really come through. So I think we're seeing a much more balanced ECB council now. Yes, you're going to get a full exploiting inflation, but more and more I think we're going to have the dust settle. You know what? Maybe time to wait and see. We've gone from negative rates to 4%. I haven't seen a full effect.
I mean, then it brings up a topic of just how long the lags really will even apply here. Which don't worry, I'm not going to get a little bit of cringeworthy words. John Milton, head of global multi-asset strategy over at JP Morgan Asset Management. We thank you, as always, for your time and your insight. Coming up on the program, we bring you an exclusive conversation with UBS CEO Sergio Armani and special lines on the Credit Suisse and UBS integration and, of course, business in China. That conversation coming up next. This is Bloomberg.
So far the short winning. I'm out of it, but yeah, definitely I'm not looking to go back there.
So then here,
things are progressing very well. We made very swift progress in integrating Credit Suisse. We closed the transaction in record times, also thanks to the big cooperation of regulators across the globe. And that's one of the reasons why I'm also here today in Beijing, because this is my first trip to Asia since taking on really my role at TBS. I think it's very important for me to reach out to all the Chinese stakeholders and reiterate our commitment to China, while also updating them on the integration.
In your second quarter results, it mentioned specifically that client confidence, sentiment, and activity here in Asia was needed. Are you still finding that's the case in the third
And that was my original TP.
The most important topic for us was to see returns of assets that left Credit Suisse.
Really nice.
Q4, Q1 this year, we started to see assets.
I can see the withdrawal.
Towards the end of the second quarter, we see also very good momentum in Q3.
Break the view at this time.
Also in general, it's fair to say that investors are more constructive than they've been.
That was nice building of the orders from POC.
Q3, there was net new money inflow about $16 billion in Q2. You said at the time you expected that to continue. What is it looking like in Q3? What is good number to you?
Well, I mean, we are pursuing similar patterns, so we are not going to be specific on numbers. The quarter is still ongoing, but the most important issue that we see substantial our forecast being confirmed, and we are getting close to the quarter. So I think that's very encouraging to see that so quickly our clients are responding to our actions to stabilize Credit Suisse and to offer them the best of the combined organizations.
It's taken your headcount, your staff base to about 120,000 globally. We've talked about, pretty forthcoming about the need to reduce that number. How much of a reduction do you think is needed at the end of the day?
I never really spoke about the need of reducing headcount because it's not our philosophy. What we need to do is to restructure the bank for this needed to be restructured, profoundly restructured because out of the situation, and then we need to extract the synergies that are necessary to make both businesses viable and stronger. So we are taking actions as we speak to resize the business. We are also taking advantage of the fact that we have natural attrition that is helping across the globe. We have demographic trends helping in that sense. People exiting the bank through retirements or early retirements. We are working also in facilitating movements of people within the bank, also between the two banks as we speak. So I think that I'm comfortable that we can mitigate the painful part of the job, which is the social cost. It's very necessary in order to create a business that is sustainable.
UBS CEO Sergio Armani there, speaking exclusively to Bloomberg Strongly in Beijing. Now sticking with European-based broadly, let's talk about Italian ones. Looks like Italian banks will be allowed to avoid paying a controversial windfall tax introduced last month if they set aside additional capital reserves. That's according to a government amendment seen by Bloomberg News. Joining me now, Bloomberg's Chiara Albanese. Chiara, pleasure to have you on the show. Talk to us about the logic behind this move.
The pleasure is all mine. So the logic is kind of a compromise that the government is doing with lenders and also with the coalition. The main message and the decision that we need to keep in mind is that the government is still planning to get the same amount of money from the level, so around 3 billion euros. So banks will be allowed to opt out if they put aside sufficient capital reserves, but the requirement is so high that we might expect only two banks to do so, meaning that they will prefer to pay the tax itself.
Does this mean, I mean, from a market perspective, there seems to be this thinking that this is going to somehow create the extra demand for big TVs, pull down borrowing costs, and ultimately let
Demo trade to BTP.
borrow at a smaller rate. Is that good news for the budget, or is this good news for Italian banks? Who benefits here?
So for sure the budget is going to benefit from the tax. The state will have more money from the tax. But we need to keep in mind that this is going to be diluted over time. Banks will only pay in 5 months. So in the meantime, the government will find different ways to finance its budget. At the same time, I also think that banks will live with it. They have factored the fact that they have to pay this tax in. They will set aside more reserves. So the compromise is very political, and the news has been absorbed by the markets and by lenders.
Now I'm upset on myself.
Very close eye. We already see slight outperformance of BTPs off this headline. We'll see if there's more market reaction. I'm Kara Albanese joining us this morning. Thank you as always. Coming up, Germany's business confidence index fell less than economists expected in September. The IFO Institute president joins us to discuss the latest German economic data and more. That's coming up next. This is Bloomberg.
Break of structure RTY.
Markets countdown from the financial centers of the world. Bloomberg Markets European close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time. Hosts Anne-Marie Horder and Joe Matthew alongside Kaylee Lyons deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time. Only on Bloomberg, your global business authority.
We're investing a lot in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in the store, so that you can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back and finally we all hope that the pandemic will be
40 points.
or changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Here's what I want, so you do not want to miss this story.
Why do the biggest names in business choose Bloomberg? Great question.
Great question. Next question again on that.
Bloomberg, top experts, great questions.
conversations that matter and the insights you need. This is The Pulse. I'm Faiza in London. Let's recap some of the data we got from the top of the hour. Germany's business confidence index fell less than economists expected in September. Joining us now for more is Info Institute President Clemens Voigt, joining us from Munich. Clemens, a pleasure to have you on the show. Thank you so much for joining us this morning. For something a very simple question. The data came in kind of tepid.
That was such a nice entry shot, and
Perhaps Germany is falling apart.
not in it.
Well, I guess it's not falling apart, but it's not stabilizing. The German economy has difficulty leading this downturn or stagnation, whatever you call it. So what we see in the data is a mixed bag. Companies are saying the current business situation is getting slightly worse, but they expect things to improve a little in the months to come. So it's not much change, but you're saying that something to do with the German economy all the time is also a situation.
So perhaps not falls apart, but weakness, as you just pointed out yourself, something you're seeing around the rest of the world. What kind of timeline does that mean for the rest of Europe? Is this something people should be watching as that Germany is the sick man of Europe and we drag the rest of the continent, or is that an exaggeration?
I think it's an exaggeration. We expect the economy to stabilize next year. At the same time, yes, I think what you're is that the outlook for
Morning.
is lower, and that is related, of course, to the labor force. It's related to the particular path of energy policy Germany is taking. Its decarbonization strategy is extreme in the sense that it has switched off nuclear.
Okay, so we got 80, that's at 82 I was looking to buy.
There is detailed regulation, a lot of bureaucracy, and this approach
84,
failing.
sorry.
Companies are telling us
So few more points, and let's see if...
its policy uncertainty in Germany, and this is not good in a situation where the economy faces headwinds anyway.
Okay, I'm in the long.
The intensive industry is leading. So there is a lot of substance in the German economy, but the government needs to make an effort.
You bought at 84?
I'd fill me in at 88, but 84 was the area for me to buy.
When it comes to the German economy?
Well, the bright spot in the short term is probably that disposable incomes, that wages are stabilizing. So there have been some fiscal policy measures to raise net wages, some tax breaks, so that we expect consumer demand to stabilize in the coming months. That's because wages are rising and prices are coming down. Inflation rates are declining, so that will lead to stabilization of consumption demand. And of course, in the world with inflation and stagnation.
I am really so disappointed from my sale because I was sold at 39 and I didn't hold it. I didn't have a belief in a bears.
In a transition towards problems coming from the demand side. So the bright spot is demand and stabilizing. Also the perspective that the ECB may not raise rates further. That will also have a stabilizing effect.
Well, it's no secret. I mean, it's Europe 101 to know that Germany is and has been for some time kind of the beating heart of Europe in terms of economic growth. Talk to us a little bit about just how sustainable that actually is. I mean, if you look at the German economy, there are cracks, there are structural issues as well. To what extent can Germany have that reputation, for lack of a better term, continue into the next decade or two?
I would say it's unlikely to continue into the next decade. Potential growth will be lower. The demographics are one reason. I mean, this will also affect other countries in Europe. So it's a problem for Europe as a whole. And there are particular issues in Germany. The energy-intensive industry, the chemical industry, the paper industry. These are industries that are currently making plans to leave Germany. The car industry is in a difficult structural transition of the most important sector in Germany. A lot will depend on government policies in that context. Government policies have created...
That was very nice sell.
for companies, there's a lot of bureaucracy, and the question is that they manage to turn this around, take a different path. But it does, I think there is potential in Germany.
We're going to be watching very, very closely, and Clemens, we're going to have you back on soon. We're sorry, we're sadly pressed for time, but we of course will be speaking with you soon. President Clemens, voice of the Eco Institute, thank you as always for joining us this morning. This is Bloomberg.
I'm done for the day.
Nice DC. I'm so pissed off on myself that I just closed that short so early. That was
It's
so
okay if you're pissed because it worked. If it didn't work, you'd be happy.
I know, this is why I'm pissed, because I should just stay break even, do not close it.
Ah. Okay.
Let's see, it's 72.
Let's move on to other accounts now. Let's play on Apex.
Okay, I'm stopped from my long.
This is what I wanted earlier. I wanted it to go to the 850. This is low.
Beautiful shot.
And now you know what they're gonna do, right?
Little bit of drop, and then will be very big up.
No, they're gonna stay here and then bring the PLC here. Because we have the storyline, previous day close, blah blah blah, how much volatility, how much liquidity do you think London still has?
Yeah, that's true as well. VIX is very high, dollar is as well very high. There are super expensive areas. With that sale, they drag them on below the RSI quite much. It looks like we are very bearish.
Yeah, completely reversed the trend, everything is red now.
Yes. Wow. Golly.
White candle is a very small bearish one, but they got a quite nice moves.
So did you notice this pattern since Friday? New York took a little bit of liquidity from New York from Thursday and then dropped. Today London took a little bit of liquidity from New York Friday and dropped.
I am just upset on myself because this was my really areas, and exactly hit the golden zone, and I was in this short, and I don't know why I lost my belief in it.
Basically covers SBB's short-term funding needs for the next 12 months. And as a consequence of that, we're seeing bonds also rally in the market today.
Because when we were dropping, The ATR actually went lower at first around your entry. I was watching it also.
Yeah.
Yeah, I took 5 points and then I closed it also because I was looking long. Everything was screaming long.
And then I got taken out of break even on the long.
Congratulations.
So let's hit this 820 and then I'll see it go long. If not, the 850.
Around real estate and the concerns that investors have, all of those objectives will be very difficult to achieve.
A fascinating story, I think, and again, one that has really macroeconomic ramifications for the rest of the continent. Boomer Salt Daily joining us from Stockholm. We thank you as always. Now, the core of this kind of property story, the housing story, is going to be in the case of a recession, who gets hit first? And of course, we have seen this resilience show up around the world in the higher income, the higher wealth brackets of specifically Europe. And if we start to see that case for recession, if this property sector world is getting even worse, who gets hit first? Well, it's going to be the higher income anyway, which brings me to the first sector that gets hit as well. And that, of course, is luxury. Who better to talk about it than our next guest, Rashid Mohammed Rashid, the chairman of Valentino and the founder and chairman of Alsara Investment Group, joins me right here on our Bloomberg TV studio. It's a pleasure to have you here right in person. Let's talk about the macro here first. The future of luxury. We've seen this resilience, a lot of money, of course, coming in from China, from the Middle East. How long does that last?
Well, the reality, it has been, for the last few years, very resilient. I think last year, 2022, have been an exceptional year post the pandemic. We have seen luxury goods grow by 12 to 20%, depending on how we treat the currency. But we came into 2023 with a prediction that luxury will probably grow 10%. We have seen very strong signs that it will be much worse than what we expected. We have a number of factors at the moment which are impacting the market. The American market is slowing down due to the reality that department stores are really in a suffering situation at the moment, plus the reality that spending is slowing down. The expectation that China will come into the market in a big way after the closure that they have suffered from in the last 2 years is not happening. For many reasons people are aware of in terms of China and the economy side of China. Despite the reality that
we will be sitting
well, I called it. Well, there's nothing to do here. We are way cheap. Nobody wants. South Texas is going counter trend. Thank you very much.
No, I took profit.
Okay.
Last time I got no profit. I went back to break even.
Okay.
And I have 3 micros. Left.
Okay, and I wouldn't want to go long here. Although
I would too. Because
the level is good, that's all. We're very cheap, but everything is saying short. And I'm gonna take a break. I got a very nice pork belly to prepare for dinner.
That's good, that's good.
When it will be ready, because cooking time is like 4 hours, so we'll see.
So where you took the short VC?
I ended up taking it at 97.
Okay, first one I was at 930, my one.
Yeah.
Then, like I said, and then I re-entered the 23.
Ah, okay. Yeah, this is where I took my TP, where I closed my shot.
Yeah.
So there, we hit 950. Here's where I would want to take a long. Okay, never mind.
One is really to have more institutional arrangement in the company, attract even better talents, but at the same
We have a new structure load.
to grow and become a much bigger pool. with the arrangement that we have at the moment through the deal that we have with Kering, that could happen by joining hands with Kering. And there is definitely an agreement that Mazuna could and will become a shareholder.
ATR is very nice to be trading for London.
But just now, it wasn't like that earlier.
The luxury in the last 2 decades. They have done a fantastic job. They have amazing brands. They have a fantastic vision. They have a very, very
Fuck's eye, I'm so pissed off. Really.
On the 5 minute there is no trading stop. On the 3 minute the selling trading stop is.
It's my 100-point hit now.
Oh, very nice.
If I will stay in that trade, if I will stay.
Ah, yes. Whoa, London dropped 100 points. That's crazy.
Yeah.
That is absolutely crazy. Adam is gonna wake up and it's gonna be even more pissed than you, Koltun.
But we're going up now this year.
You think? You're not? You don't think it's gonna break this 820?
No, not now. Not in London.
Which is something that we put it very clearly in the agreement that we have the purity groups here.
Talk us a little bit about what
Okay, I will open and
What else is down here?
The bottom.
I know, but what's so? What else do we have? I don't have anything.
at 30, I am 31 long.
Very nice catch.
What we have done with the last 10 years is amazing. I mean, we acquired the brand in 2020. It was almost less than 300 million. Today is 1.4 billion. It's really the ultimate luxury of what haute couture and Italy can present. This is attractive for Kering, and this is the kind of really of expansion that they want to build for the future. When it comes to bigger acquisitions,
First
as you
done.
mentioned, I mean, this is really something up to Kering what they want to decide. But I think a lot is happening in the luxury market because we have seen, as you said, growth over
7 points.
and made this market one of the most attractive in the world.
But you're being humble, like you're an expert in this stuff. You're an expert in the luxury business. But of course now it's Kering's decision. In your view, does it make strategic sense to have a partnership between a behemoth like Kering and Richemont?
Well, I think, this kind of mergers of any big identities, you cannot only take, the numbers and the brands and look at it. I think there is another element in the equation, which is a culture. And I think this is really up to the management.
It was exactly hitting the TP from the Friday Golden Zone. From retracement. And from today once.
Ultimately, a potential full takeover of Valentino from Kering. Where does Balmain fit into that equation?
We have Valentino, we have Armani, we have Alzaneri, we have Bailey, Turkey. These are 4 big assets. And they're all behaving in a very successful way and growing. And we will continue to grow and we will continue to have a much deeper involvement in the luxury luxury market. For that reason, I think Balmain will continue to grow. We acquired Balmain as a very, very special brand, which is almost 75 years old.
What did Adam say?
It is a brand that is growing
In people's
especially in the United States and China.
I'm just gonna leave these microphones alone.
We will continue to grow that brand to a much
Where can we?
place in fashion.
Lately, after its I believe debut in I want to say Milan, it dealt with a major robbery. What can you tell us about?
The news drop for the market to react in this way?
Well, this was in preparation for the fashion show that will be tomorrow.
Can you repeat the question? We didn't have any proper news.
There was no, there was no official news, but something must have happened and then we're gonna find out about it later, like always. This is not something that, we went to high rejection, blah, blah. This is something Something spooked somebody and they're moving big money.
Well, it's probably 25% of the collection. But it has been good produced there.
A lot to digest, and you've hit it all. A pleasure to have you on the program.
But we can never know what until after the fact. We don't have access to that kind of information.
Coming up, we take a look at Lancet Tech Global, the carbon recycling tech firm will discuss the challenges around capturing carbon emissions and more. Stick with us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying. We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a good trader, something good here. And so he's on the bus after a game, and he's been trading on the bus for the season. That's on the spot. And then it was this convention, right? The people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are my dad, my brother. It all happens right there as a confluence of all these parts of my life that have found its common center.
Where's
Are you out, Koltun?
No, but I will be sure.
Ooh.
Oh.
You gave it a big stop, huh?
A bit. It's almost there this year. 805.22.25, so I will be. I am out.
Ouch. That hurt.
I am just.
There's 100 points, but I'm not gonna take profit.
I'm just annoyed. It was such a nice entry from my side, and I could be like done.
Yeah, you had an awesome entry. I'm done also, so I'm not looking to re-enter because I don't know when move is gonna be done.
I think I'm gonna put a stop at 20, at that 820. Everything's back up. I'm gonna short, yeah. 3 micros. I took profit because earlier.
Don't short here. We are really.
No, I'm in the short.
Ah, okay.
But remember, I was in that long, and it went all the way up to the 940, and I didn't get out, and then it took me out of break-even. But to secure profits, I think I'll put 1 micro at 20.
Actually can have a profit center. So the costs might be high now, but they're coming down quickly, and like I said, it's it becomes.
But I only have 3 instances.
Talk to us a little bit then about plans for scaling up.
So our technology is already commercial. By the end of this year, we will have 6 commercially operating plants in China, India, and in Europe.
I kind of just want to take a long.
And we just need to.
Really, everything was showing so nice to just stay, and for some stupid reason, I didn't.
So I do expect to go faster, and 6 of our plants are going to prevent carbon.
We have a breakdown.
Yeah.
So that's a pretty big deal already.
I'm just watching it, even if you change your price very quickly at around 890 or 880, there was no entry into the short.
Well, I got in at what 90? I got in at 97, 897.
Yeah.
This
So
year
that was the last chance for an entry. Yeah, Colton.
I doing revenge trading. I enter at 802.
Okay, close it down.
That happens to me
I
more
am
than
break even now, and the first TP was done.
Okay, just be careful.
This is why I just I go break even straight away after they enter the trade.
Just close it down, come back to New York.
Probably will go for a walk. Yeah.
Let me see if there's any
fake out. Did it fake out?
news.
Talk just a little bit about just how global your market actually is. You mentioned H&M, Zara, Cody, etc. Where are you expanding?
Right now, one of the biggest places for us is India. There's a lot of interest in India. I think the Prime Minister Modi just announced at the G20 the Global Biofuels Alliance, and we think that India is a great market for us. And we're looking at ourselves as our partner, India Oil, just started up our plant that uses their refinery off gases to make ethanol. So, yeah, that's going to be a great place for us.
How much is the
Come on, go higher.
Because one of the, from my understanding, one of the hesitations to invest in India is
22, I've got the second TP.
foreign companies, specifically American companies, into India's kind of ecosystem. We've seen that with IKEA.
Actually, I moved to 31
It's a great example of that.
in
What
25.
support do you have from the government?
So we license our technology to companies that have the balance sheet to build our plants, like India Oil. And they, of course, partner with their own governments. So we don't have to get in the middle of that. And there is a lot of government support with incentives and also infrastructure building. Really, our partners could be like big gorillas, right? India Oil, we're not going to be better than India Oil.
Okay.
But my mic is.
Prove it against.
Yeah, well, look at,
I don't have to prove it against.
Because you switch them off.
No, I turned everything back on.
in Georgia, I want to say. Talk to us a little bit about the timeline here. Schedule the timeline. Are you on track for that? What does that look like?
Absolutely. So that's going to produce 10 million gallons.
What do I have? I mean, nothing.
It will be mechanically complete by the end of this year, and it is on track for that. And you know that's a really nice.
And okay, no, I needed to get out.
136 points. That's... Why the hell you closed
And
it?
then an update as well on the status of Project Dragon, which I gotta say is a pretty cool name. I'm very excited to see that on t-shirts and hats.
Come on, give me the 31.25.
Talk to us about the update there.
Yeah, so actually we just did our permitting application and we've done the comments for the permitting, so we've made quite a bit of progress on the engineering.
2737.
From the Utilities Department of Transport, and that's massively helpful in getting the project moved quickly. Yeah, that's also progressing. I expect it'll be another 2 years before that is happening.
Another 2 years.
Oh, there I have to prove it against. It was delayed.
I believe it was planned for 2027, so you're actually ahead of schedule. Is that right?
The alcohol to jet plant, the sustainable aviation fuel should be...
I staying in this trade.
Okay, so ahead of schedule then. We appreciate your time as always. This was a crucial conversation in the transition to green technology. Dr. Jennifer Holmgren, Tech's global CEO, joined me right here on set. Thank you as always. Coming up on the program, the EU wars China. There will be more forceful upholding fair competition and defending...
Good morning.
Morning.
Next, with the details, this is Bloomberg.
How are you doing, Self?
I'm good. I'm in long right now at 8:10.
I am long as well. 802.
Yep. I almost got stopped out though. That was a bit more farther down than I expected it to go.
Yeah, but I am so upset because I was in a short and I closed it after
Really?
taking few points, yeah. And it was 136 points from that trade.
Hey Colton, check Tesla chart a little bit.
It was a good short.
What you say?
Did anyone get that?
I
said check Tesla chart a little bit.
I know, I done it. This is why I'm saying I'm staying in my long.
DC, did you get that short? That was like a perfect short from London.
I got parts of it, yes.
Okay. That was a fast drop though.
Yeah.
I wasn't awake for that, so.
You didn't get it? Ah, so that's why you're going long now.
Maybe.
Or he was waiting for that level.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Verify agents, find people, analyze markets, answer phrases,
So
This is what you're talking about?
yeah, do you think
Tesla?
Do you think Tesla is to blame for the drop?
Yeah.
What happened with Tesla?
I don't know. It just crashed like 15%.
Have a look here.
Just
it was very
out of
expensive
nowhere.
and it just dropped. Everything
Huh.
dropped a bit, but Tesla dropped the most.
And then it can't be any news because it's 3 a.m. in the morning.
Maybe
Right.
maybe something happened in a German factory. Okay,
Wait, let me check.
I'm moving my TP to 35.5. I've got then 52.
Ah, 35.5. Yes.
And then other.
27.
That was like, instead of adding to my amazing short, I close it. Not good. I'll be back in a minute.
And now you're seeing the same thing be into USD as well, down about 0.2%, which again is a recent development. A lot of that movement coming from that German repo index as well. The strength that you are seeing though is from the Bloomberg dollar high by 0.2%, and even yield on the 10-year, seeing a little bit of a sell-off in the bond market as well. So again, a defensive play, at least when it comes to the FX space, that seems to be the story there. So certainly something we're going to be keeping an eye on very, very closely. Now to one of the major stories here, the EU's chief trade negotiator warned China during his trip to the nation to be more faithful in upholding fair competition.
Yeah, 7.
Now to reverse Maria today, she is all over that story. Maria, we're talking about imbalances. What does the EU actually want from this trip?
So my first TP would be hit if I wouldn't move it higher. Go.
This is a crucial portfolio for the EU, and you look at just the size for really the magnitude of the single market. And Dombrovskis is going there with a couple of messages. In fact, one is obviously
This year I send you something.
to de-risking. He also says the European Union does not want to cut off economic relations with China, but as you say, they have to be balanced out. To me, there's also a quote that's very striking. He says, at this point, China and the European Union find each other at a crossroads, and it is up to China to figure out what is goes. Either balanced out or the two will have to move further away. Let's take a look.
We stand at a crossroads. We can choose a path towards mutually beneficial.
What am I looking at, Colton?
One which is based on open, fair
Nice levels. Can you see? I have a rejection from the level.
Ah, yeah. Ah, you had a level there even.
Yeah.
where the shared benefit
It was bullish level. If you will cross it, we should be bullish, but we didn't cross it. Okay, TP done.
And that was Dr. Dombrovskis' trade thoughts for the European Union. And you heard it there, pretty really striking language.
Then we struggle where the bulls was, the two green lines. We couldn't cross it, and then we break it. That was nice liquidity grab by the bears. We come back to my fib line from when? Okay, so this is Friday 18th of August, the low.
Yeah.
And can you see this is the shorter pattern which I was seeing, low. There was a high, there was a low, retracement to golden zone. We never come back and reject the trade to 76, and nicely coming back to the source. So the TP for that one is at 455.
So that will be good. 1, 2, 3. 5.
Okay, so the long, it's not valid anymore. They eat it. For the overall retracement, so we're going lower. $13,700, that will be nice. Go 52. Have a look on a scalper like bears without like any big candles. They done the huge sale, and bulls with such a big candles, they cannot go any higher.
Yeah.
And the bearish surge was there, and bullish surge is with such a big candles, but it's nothing, no power at all. This is just a reaction.
And the pilot also turns green on the 1 minute. I'm waiting to see on 3 minutes.
Yeah, but that's just the reaction for the drop.
Okay.
Ooh, all 6 time frames, higher time frame candle red.
I want to see how big will be this reaction. I am break even, but it will be nice to see testing of the VWAP.
Oh. I got a TP1 and 2 done, so just got runners.
And there's something else going on in the underbelly of the market. We have industrials flashing
Okay,
from
so
sessions.
2.
That word is back in the form of a market narrative. Industrials down 8% from the peak. Russell 2000 down 11% from the peak. And money is gushing out of stocks at a global level. $17 billion walked out the door of equity risk last week. The Nasdaq continues lower this morning, higher for longer. Is the real sort of narrative here, and Europe is under pressure. The miners are at the bottom of your screen. The reason why we have that they're down 2.3% is because of the Evergrande debt rolling down, and that's the bottom line.
Wow.
One of the worst weeks for markets.
Look at that.
Oh, come on, my 52 is not far.
Yes, it may well be contained in China, but Evergrande is pervasive.
I will take that.
And it's crossing borders.
Yes, that's why oil is so interesting this morning, because even though all the
You will take that and like it.
I'm trying to pass this Apex Trader evaluation in one day.
Don't be greedy.
But then you
I
can't-
tried a few times.
You can the PA. You can't do the same thing on the PA.
You can't.
No.
Why not?
When you go to the PA, they have the rule of the consistency rule. You can do 30. Your highest amount has to be 30% of your overall value. Of your overall.
What?
Yeah.
Oh my, that is horrible.
Yep. They have a 30% overall.
I have the static one. 'Cause that's the only one that I can tolerate with Apex Trader. I can't do those, what's it called, the trailing threshold. Those, I can't do that. It's bad.
Yeah.
That's 100K account, right?
Yeah, the static 100K.
What's the difference on the static?
It's no high watermark, right?
Yeah, I think so. I'm not even sure, to be honest.
And it is whispering, or it's beginning to hide a little bit wider. I like the way you frame those risks. They're not exogenous risks, they're known knowns rather than...
But I'm about like $500 from passing it right now.
But looking at your yields, Danny...
Oh, the drawdown is only 625.
Yeah, it's only 625. Yeah, it's bad. It's like you can't lose basically.
At all. At all.
Yeah, at all. Yeah.
The storyline right here at 650. It hit it right and it came back down. Come on.
Good morning from London, Manus. Hopefully it will be a good morning, but as you pointed out, we had everything stocks turn pretty quickly. Now, there are those fresh signs of debt loads coming from the Chinese property developers. Let's get into a little bit more, because China Evergrande Group certainly running out of time to get back on track with its restructuring plan. We have concerns mounting. The latest setbacks included the last-minute cancellation of credit meetings and detention of staff.
Yeah, I have a level at 50. That's Sydney, Tokyo's ranged from, I think, last Friday.
And that's also the storyline, the storytelling line.
Last Thursday, I think.
Its worst session in 9 months. Now, joining us on this risk is Klaus Bauer, global chief economist at Societe Generale. Klaus, always such a pleasure to see you.
If we get back above 850, that's really bullish.
At what point do you look at this housing crisis and say, despite the stimulus China has injected, this will overshadow it all?
Well, I think that's already happening, but I think what the key risk is there going to be an implosion, i.e. financial implosion?
I was a human for 10 years, and even big moment. And I don't think that that's going to happen, because you must not forget that basically the entire financial sector in China is going to go. But the fact is that the Chinese government has been...
Okay.
I think I saw a news
Done.
there was a very good headline, which was no bazooka.
Previous daily open.
That's exactly what the Chinese government has done. It's kind of a piecemeal attempt at stabilizing the economy and stabilizing the
3 contract left.
What I'm much more concerned about is, will you be able in China to rebuild confidence in the private sector? And that, I think, is a much bigger challenge.
You saw my line, no bazooka, but many pistols, and of course we've seen implemented.
Next TP at 68.
Another one will come live now, has just gone live.
So this time I didn't chicken out, but we need to pass 60
So
now.
there's absolutely no global reverberation, or where does the shoe fall on the reverberation as a result of the implosion in the housing market?
Well, I would certainly wouldn't agree with that there are absolutely no reverberations.
So Texas,
Yes.
you're funded on Take Profit Trader, right?
I what?
Do they have a consistency rule for their funded accounts?
No.
Yes, they do.
No.
Yeah, they do. Unless you buy that other, unless you upgrade to a pro.
Yes.
Oh, really?
So you would have to do it another time. Like you would say you did the 50 and you did the 3.
Yeah.
You don't withdraw it because you need that cushion. And they give you the opportunity to go to the pro, and the pro doesn't have the trading loss or the consistency rule.
But it's more money, so you gotta pay for the pro, or?
Yeah.
Oh my.
Yeah.
Yeah.
I hate the consistency rule, but we're kind of stuck with that.
Yeah, it seems like it. Does Top Step have that too, then, I'm guessing? Because I'm taking like 3.
No, Top Step don't have the consistency rule. They've got something like that as you go to
theirs
the
is
Express.
$200 a day. They want you to do $200 a day for 9 days. I don't like that.
No, you need to do at least $200 a day. At least $200 a day to count as the winning day.
Oh, yeah.
But this was always there.
Oh, okay.
And at the beginning they're not giving you all of the contracts. You can trade. You need to grow up the account to trade more contracts.
The reason I like Take Profit Trader is because we can withdraw. I was able to withdraw twice after getting funded.
Yeah.
I mean, that's the
Those
reason
are
I like
nice.
them. You can get
Yeah, because you can withdraw on day 1, right?
Yes, after you hit your goal. Yeah. That's the only reason I like Take Profit. The consistency rule, all of them have it. Apex is just the worst. It's at 30%.
Yeah, that's horrible. That's why I've been doing I've been doing direct accounts, so like it's instant funding. You pay little more, but you get a funded account right away. It's called Tick Trader.
What platform is it? Trader? I only know how to use Trader.
Okay. No, it's on Rhythmic, but it's Tick Trader, and they have like a 50K direct, a 10K swing count, and there's like no consistency rule. Like basically, if you get above the threshold, you can withdraw 100% of profits for 3 months, and then it's 90% after that. It's pretty good compared to most prop firms, to be honest.
Really? I just don't know how to trade on that thing. And last time I got Apex with that, and I canceled it because I could never download that stupid Ninja Trader.
Yeah, I don't like Ninja Trader. I like Trader. Obviously the best too, but.
Blasphemy.
Take Profit is, I like it the best because of the withdrawal.
Yeah.
So, question for Take Profit: if you get funded in one day,
no, you need to do the consistency rule. You have 50%. It has to be 50% in the evaluation, and then the same in your.
Yeah, you and it's minimum of 5 days trading, so you can't possibly.
Which isn't that bad.
It's not bad at all. No, it's not bad.
Yeah. To get rid of those rules, you would have to upgrade and then do it all over again.
Mm.
Because I see the 50K account is only 170 a month. That's pretty
But
cheap.
they have a 50% code off, so it would be like
Yeah, they
they
have
would have
50.
What's the, can you send me the 50% code or can you put it in the group chat?
It's on the
Yeah,
website
I,
as you're playing.
Huh?
it's 50 and 2. Let me see.
What's the code?
it's 50 and 5. It'll say
Oh,
there
there
right
you go,
now.
50 and 5.
I bought an
The code's called
evaluation
50.
equipment.
Hold on, the code's called 50 and 5?
Yeah,
Yeah,
50 in the word and.
I typed it in the chat for you.
Thank you so much. Thank you so much.
No problem.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts.
You know what? I'm lying to you. No, I am so lying to you. When I was funded, I did make 4,000 that first time, and I withdrew the 1,000
Oh,
that day
okay. On
one.
the on Take
Yeah,
Profit.
because I made 4,000 on one day in one day.
Yeah, I think the consistency rule only applies to the evaluation. I
Yeah,
don't think
sorry
it
about
applies
that.
to the
I'm so
funded.
sorry.
That's
So
alright.
the trail deal goes away if you upgrade to the Pro Plus,
If
and
you
then you get
upgrade,
90
okay.
90 10. 90 10
Ah, okay.
on Pro Plus.
Okay.
To do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work
Oh yeah, I see the code.
do
I see the
does
code.
for investments, lots of testing, lots of
But I didn't want to do it all over again.
lots of
Yes, I
research.
should.
When I was a historian, and that was in the old days before the internet, so you'd sit in the stacks and you'd pull one thing and go around with the others and you'd sort of like a mosaic theory, which put all these things together. I feel like I do that in my due diligence.
He is proud of being the most pro-union, pro-worker president, not only compared to the Trump administration with its anti-union policies, but really compared to any modern president. You're not going to find
And
someone
take profit trading. That's the only funded account you have. But you have other funded accounts.
these other companies can thrive. Win-win deal.
I have Apex, but what's messing me up is that 30%.
Profits should lead to record pay and record
And then
benefits.
Apex only lets you withdraw twice a month.
I don't like
That means
Apex.
I
Apex
haven't met
is
my goal yet for them on Apex to start withdrawing money.
Apex has like the dumbest rules ever.
Yeah, the Apex rules are. It's only for scalpers.
Yeah.
Well, it's an interesting situation, and it's a situation that doesn't have a huge amount of precedent in U.S. history with the president Biden saying he's going to join the picket line, right? This is something that we don't tend to see, and as you know, the election is next year, and in U.S. political time, that is basically no time at all. But it comes also with another unprecedented act, which is on Wednesday, Trump is skipping the Republican debate to give his own speech in Detroit, both of which are really trying to woo the workers here. But
Just give me my 100 points.
through the weekend,
There was a short in the morning, you took it.
Just 41 points. Come on.
The reason is they say they've made progress on a couple of things. One, reinstating the cost of living adjustment, the increases that were scrapped in 2009 when we restructured the auto industry. This is inflation protection for the paycheck, but also the right to strike and also the enhanced profit sharing. So this is where they're rewarding Ford for having made progress in these talks, but there's still
200 not accepting us. We're just staying below 200 moving average. Dollar trying to go higher.
Oliver, thank you so much. That's Bloomberg's Oliver Crook. Now, in other strike news, over in Hollywood, screenwriters have reached a tentative deal with studios that include Disney and Netflix. And in a strange twist of fate, The American is now going to ask a Brit about this. Joining us now is Bloomberg's Alex Webb. But we all watch Hollywood, so we all feel the significance about this. Is this success? Is this strikes over yet?
Well, it certainly looks as though we're getting very close to it. The members of the union will still have to vote on whether they agree with the terms that are being put forward. We stand to lose that they probably will. We don't yet, however, fully know the details. The union has said that they think they've made good progress and they're happy with the deal. So when we have the details of it in a few days' time, then we'll be able to gauge the temperature of the writers themselves.
We've certainly been on strike for more than 140 days now. Alex, thank you very much. Alex Webb, the very latest Hollywood strikes. Meanwhile, the Congress heading into a make-or-break week for avoiding the government shutdown. Leaders of the Republican-controlled House, they're hoping that they can persuade the GOP holdouts to get on board with 4 full-year bills and a short-term funding patch. Shutdown is set for October the 1st unless Congress acts. And if no deal is reached, hundreds of thousands of federal workers are set to be furloughed. Carlos Belda is the global chief economist and Society General. Our guest this morning setting the tone. Danny talks about a number of risks. None of them are exogenous, but on a scale of tail risk, a government shutdown, how do we need to look at it if it happens short, fast and furious, or if it's dragged out? What is my risk for the government shutdown, guys?
Well, it is a reflection of the political analysis in the US and being rather dysfunctional. In the past, shutdowns have not tended to have an enormous impact on the economy. People are just furloughed, they eventually get their money with a delay. So I don't think it's a huge risk. There is of course a way out. Even if the holdouts in the GOP refuse to play ball, there's always the chance of a bipartisan deal, although that might very well mean that the Speaker of the House gets sworn out by his own party. It's just all part of this dysfunctionality of Congress and in particular of the GOP.
You previously have said that you're concerned about a U.S. default when we had the debt ceiling problem last time. How acute is that concern for you now? Is it still simmering in the background?
Absolutely simmering in the background, and my concern with the inability of getting these funding bills through is only raised, and my concerns are only raised by this imminent risk that the Speaker of the House is under constant threat to be fired by his own party. So I think that risk is very much there, and what we're finding is that the resistance and the intransigence of a few people who can really
I'm taking for a walk.
rather than that there's an increasing degree of willingness to make compromises. So I am just still concerned about that.
Where's the PLC at?
PLC is 1 second, still quite hard.
I'm just curious because we're like.
Oh, 920. So PLC is at the top.
We're just slowing down for another 50 points higher. That's all.
Because you want to have your 100 points.
Right, Koltun.
I hope so.
I know you hope so.
But yeah, the first area where we're struggling is 70, and the next one will be VWAP at 88 because there is 61.8 as well.
Yeah, 90, I have 90 as level too, up there.
But if we can break it, the reward will be nice. But if we cannot break it, we're going to 760.
Both of his numbers hit. It's gonna be like, I wasn't in any trade.
that's the kind of cycle that makes inflation last. Is that you get high inflation, workers lose purchasing power, they demand higher wages, and companies raise prices.
We're green. We're green on the pullback, finally.
Wage price,
On the 3 minute.
price wage file because usually
Oh, never mind.
Fair
It
enough.
just went back red.
Thank you so much for doing it. Unfortunately, we're out of time. It is a pleasure to have you as grandfather of Societe Generale. Now, coming up, who would typically pay for a chance to get matched on an exclusive dating platform? Tinder figures it is $500 a month. That's its subscription for its most active users. More on that next. Stick around.
Skończyłaś na dzisiaj? Dzisiaj?
Okay, they look like the YM and D40 getting green and dollar is dropping as well. So let's see if we'll get a bit of this retracement. Whoa, RTY was really crushed today. So far the YM is the strongest.
This is the brief I managed spending in New York with Danny Berger in London. A story that caught my eye over the weekend, the dating app Tinder has rolled out a premium subscription service. Tinder Select, as its most active users will pay $500 a month. The service is offered to less than 1% of the
Value area is not accepting us as well. This is the problem. We'll be low, the value area low.
Hey, I have a question for the take profit trader. I just set up an account. Can I trade NQ?
Yes.
Yeah. Yeah. I would just do micros. That one gives you a lot of micros. I mean, me, what I've been personally, that's my. I do 10 micros and sell as I go. So it's like a mini, but because it lets you do X amount of micros, just like Apex. They have no scaling, no nothing like that.
I thought they said
That's
you
just
can't.
physical.
I thought they said you can't trade the symbol. At TradingView via TraderVate.
I don't know. You can Tradeovate. You can. I don't know. You should be able to because I have that account.
You might be on like a different symbol, like the continuous contract maybe or something like that.
You have to literally be an NQZ.
You have to be an MNQZ. You can't be on the MNQZ exclamation mark. That's the continuous.
That's what I'm on. I'm on the CME underscore minis MNQZ 2023
Yeah, that's the right
On
one.
Tradeovate or Trading View?
on Trading View.
Yeah, it should just be MNQZ 2023. But then you have to go to your settings. You have to go to your settings and if you want to trade on
This is
there.
dropping 68.
You have to go to add-ons and make sure everything's activated. Go to Tradeovate, go to settings, and make sure everything is activated, everything that you want to use. You know what I mean?
Yeah, so your Trading View is activated.
No, Tradeovate. Or
Yeah,
go to Tradeovate.
so, like I'm on the Trading website. I'm on the add-on section,
Yeah.
and the add-ons that I clicked are Trading Tick Stream, the Order Flow Plus, Free
And now you need
Indicator.
to log into. Now you got to log into your Trading View with those credentials.
Let me log out and log back in. Hold on.
No. You're in Trading View, so go to Trading Panel on the bottom.
Yeah. And then log in.
And then click Tradeovate. And then log in those credentials that they gave you.
As well as session view up is at 89. Sorry, 69.
Alright, I'm sorry. I'm not trying to take over the phone call today. I just have another question. Because I'm on the actual Tradeovate website. I'm on the Tradeovate website. The account is the account is active and live. When I go to the ticker tab, my MNQZ is showing up as yellow, and it's saying that it's delayed data. The data is delayed. I don't have that on Apex. How do I get that off?
I don't have that.
You've got data delay, but you're trading on a trading view.
So it said data delay, subscribe now.
No, you shouldn't have to subscribe on.
Did you bought that day? I know, you got data directly. Because you're connecting to the Tradeovate, yes, Tradeovate.
You said what?
You selected Tradeovate, right?
Yeah, Tradeovate, yep.
You selected Tradeovate when you opened the account?
Yep.
So when you go to your Take Profit Trader, it has a key it has login for Tradeovate and then Ninja Trader?
Yep.
Like it has your, okay. Because I don't have that on my screen. I don't know.
That is up about 5 basis points. Same with the 10-year yield. We're looking at some curve steepening going on.
Oh, Jane, can he share his screen so he can show you?
Excuse me?
Yeah, or show us. I don't know what he's talking about.
Yeah, can I? Yeah. Let me.
I don't know. They have to give you access. I don't know.
No, we can share your screen. This is not a problem.
Being driven, I should say, with what's happening on the equity side. We're going into the fourth
Oh,
week
man.
of the dip in these equities. We've had a downside shift in equities for 3 weeks in a row.
Come on.
It's been gone by nearly 3%. Last week was down 3.3%. So we've got this risk-off sentiment from Evergrande in China. It's a name that you know well. Yes, SocGen.
NQY.
But you're looking at a third of $1 trillion worth of debt on liquidation risk, and that will impact.
It should be NQZ.
Across borders. But when he does, the biggest outflow of this year from global stock, $17 billion walked out the door. There is an underbelly of concern that word or is back.
You see my screen now?
Industrials are down 8%.
Yeah, we can see your screen.
Alright, so this one I'm talking about right here. This is showing up as the data delayed. When I click on here, it says data is delayed, and I say subscribe now. I come down here.
No, you don't have to subscribe.
Okay. So
It shouldn't even
Are you
say
in your
that.
phone? It shouldn't. Log out of that.
When did you open the account?
Just now.
Well, the
You
problem
might need to give
is
it some time.
in America business day is not open yet, so maybe they didn't activate your data. You have to give it like 24 hours.
No, usually they're quite quick, but yeah.
My account is live right here. Yeah, but my account is live right here. This is my account. It's live.
Yes, but they made your account, but they didn't activate the data.
Yeah. You might need to wait until like New York opens
Until
or something
session.
like that. Yeah, because it's through. Yeah, I don't know.
No, I've never seen that before.
Yeah, I've never seen that either.
Okay, question. Are all of my add-ons correct though?
You don't need anything. You just.
He wants to trade. Do you want to trade on TradingView?
Yeah.
All the free ones are okay. They won't matter.
All the free ones are fine.
And how about this?
You don't need anything
No,
else. You don't
need that.
Nope.
Alright, then I guess I'll just wait then.
Sorry.
She's from Commerzbank FX. I was looking at the quote. The dollar's around about 5%, give or take, an eighth since the middle of the summer. That rally is either going to be driven higher. We're in this risk-off mode. You're concerned about growth, and with that in mind, that is what caps the dollar rally. Should we start there?
Clearly, I think this is the big risk, but because there is simply a lot of US optimism priced into the US dollar. This was supported, of course, by the Fed's view, which basically said that even if we are seeing a cooling of the economic dynamic, this will
Koltun, when's the Call of Duty stream coming?
I don't know. Maybe
I'm waiting.
Maybe shortly.
He's practicing his
No,
aim.
see, I didn't touch it in like a month's time. So maybe today will be a time to just touch it and try it.
I'm guessing if the U.S. economy is turning, surely euro is not where you want to be.
Come on, can this price move to 74 really?
I would like that.
Yeah, I've got TP at 68. And I was really so not far from it because we come to 65. 3 points away from it. But if we come to 74 and can stay above it, that's really good for us.
I'm looking at 890. That's probably where I'm gonna take everything off.
I've got the 890, another one, and the last one is. The last
I don't think it's gonna go all the way back to the high.
It will be nice for the bigger drop if you will go to the 890 to have a nice bigger drop.
I'm telling you, we have that storyline all the way up there at 380 something. 15.3 hundreds.
I do think we retraced a little from last week's move, but then continue lower.
Oh no.
A significant divergence in dynamics in inflation dynamics in the Eurozone and the United States. So I doubt that such a significant move in Eurodollar would be justified.
One of the big debates, Esther, is whether you see a vicious second line pump high.
I would love to see all-time highs taken out though first before we go lower. I don't think that's going to happen anymore. Who knows though? It could.
835. It is 50.
What is it that you see that could deliver that second line, really a second line pump higher in inflation globally?
Well, I think it's largely really the underlying risks stemming from the labor market, because to be honest, we simply are not we don't know very much about what is driving recent inflation dynamics. I mean, like central banks were surprised by the pickup in inflation in 2021. They were surprised at how robust inflation developed in 2022 and 2023. So what is giving us the confidence that everything will decline like in exactly the way that central banks are expecting in 2024? I'm just thinking that the market is a little bit too optimistic with respect to these risks.
Well, what does that do especially to my EM trades, the EM disinflation trade, expensive oil, Esther? Does that completely throw it out the window?
Yeah, exactly. I mean, in particular, if you look, for example, at Latin American central banks, they were very sensitive to inflation risks. I mean, yes, they have now started their rate cutting cycle. However, they really still show that this is just, adjusting to these extraordinary real interest rate levels they have by now reached. So I think as soon as we are seeing any signs of disinflation, super cycle of inflation levels picking up again and risk, I think the emerging market central banks might actually be the one who would be the first to react. In particular, as the chances for a soft landing in these countries is quite promising. So I think this might actually where we have to look for, also to determine the risks for the G10 central banks.
Well, maybe that's the bit of divergence play. We're trying to understand China risk this morning. We're looking at it through the prism of the equity market, of miners, and to what extent it's going to impact the world. We had SocGen say it's very contained. The Chinese have the power to contain the angst within the property market. But through the FX prism, the yuan has been literally, unleashed. It's gone lower and lower and lower. From a broader FX, Asia FX perspective, the weakness in the yuan, is it done, or what are the reverberations of this weakening yuan and a China in stress?
Well, the debt risk or the debt problem might be contained to China, but it's clearly showing us that China will not become, a supporter of global growth anytime soon, because the problem will then be the growth number for China for quite some time to come. And this also implies that the yuan will remain under depreciation pressure for quite some time to come. We have seen PBOC stepping up their verbal intervention if the yuan moves too much higher. We have seen that they take several measures to dampen the up move in dollar renminbi. However, this will only, dampen the apples. The pressure is clearly to the upside, and we think it will remain there. So we would need to see, a substantial reduction or a substantial pickup in Chinese economic dynamics for this, for pressuring the renminbi to turn around.
And then what does that feed into Japan, into the yen, Esther? Because you have the Bank of Japan governor who has continually reinforced that they're not there yet with a 2% inflation. If China continues to be a problem child, does he seem more and more right with every single day that passes?
Well, it seems like it, in particular, as long as global inflation levels move lower. Now, there is a high chance that inflation rates will, like continue to be lower. As I said, either it will work out for the whole world or it won't work out for the whole world. And for the Bank of Japan,
Is there any more
inflation
liquidity that they can pick up further down, or from?
Much lower, yes, there is a plenty from earlier. So.
Oh, sorry guys, that was me. TP1 done on the short.
Yeah, that was nice entry. I saw
What did you enter? 50?
54 DC.
What? My entry?
53, 54?
Yeah, your entry.
54, yeah.
Yeah, I saw that.
The ghost of Liz Truss hangs hard. A year ago when we had the crash, Truss economics trashed the point, but the market is rebuilding its short positions. You said it was a tight decision, 5 to 4 in terms of the floors. When you look at the landscape of the UK, would you be loading up? I mean, the hedges are loading up to short the pound. Is there renewed pressure to come? Are you a seller of the pound at these levels? With Nomura talking a really bearish trade on that. Cable this morning 122.20. So we're near the short point for Nomura. Is it getting tight for you in the pound? Yeah.
I don't know, the bears are already tired. Why? They weren't tired before. What the hell? But I'm gonna leave it and see how far it can take me.
Inflation rates in the UK still look quite high, particularly because they have a strong or quite a high wage inflation compared, for example, to the Eurozone. And you can, even compared to the ECB, the ECB smaller factor, as they have shown with, like the recent wage costs. So we've been skeptic for the past quite some time now. It was, like too strong in our opinion, so we are seeing the correction we have expected. But we still think the correction is going through.
All right, good news for me. Still a challenge. And Esther, thank you so much for joining us. Esther Reich out there of Commerce Bank. Now, coming up, we're going to bring you our exclusive interview with UBS CEO Sergio Armani. That's next. This is Bloomberg.
Oh man.
Okay, I adding to my longs.
You're adding what?
I add to my longs now.
Right now?
Yeah, at 34.
Okay. Are you trading on the 30-second or the 1 minute?
1 minute.
Or are you looking at the 30-second?
No, 1 minute. As you can see, the bears are tired. They couldn't move any lower. We have a little bit move here, little bit move there, and we are tired. We are exhausted here. So I wanna see now. Bloody hell, everything is so red.
Monday morning with Matt Cranny in New York and Danny Berger in London. UBS CEO Sergio Motti says it's making good progress on the Credit Suisse integration. He sat down with John Liu, Remo's managing editor for Greater China, for a wide-ranging interview on his first trip to Beijing since taking over the helm again.
Yeah, you were right. All I had to do was be patient, Texas.
Oh, did it come up?
Yeah, thank you so much for that.
Integrating Credit Suisse, we closed the transaction in record times, also thanks to the big cooperation of regulators across the globe. That's one of the reasons why I'm also here today in Beijing, because this is my first trip to Asia since taking on leading my role at UBS, and I think it's very important for me to reach out to all the Chinese stakeholders and reiterate our commitment to China while also updating them on the integration.
In your second quarter results, it mentioned specifically that client confidence, sentiment, and activity in Asia was muted. Are you still finding that's the case into the first time?
Yeah, I think we still pick up across the globe, also Asia, in terms of client activity. So the most important topic for us was to see returns of assets that had left Credit Suisse in Q4, Q1 this year. We started to see assets coming back at Credit Suisse towards the end of the second quarter. We see also very good momentum in Q3. So that's the most important issue. But also in general, it's fair to say that investors are more constructive.
DC, are you still in your short? Was it DC you got in the short?
Yeah, DC took a
Yeah, hanging in there.
I am happy the way we are up to the trade. Dollar look like wanna drop. We need a bit of the strength from the DAX, and then we will test the VWAP.
The most important issue that we see substantially our forecast being confirmed, and we are getting to the close of the quarter. So I think that's very encouraging to see that certainly our clients are responding to our actions to stabilize Credit Suisse and to offer them the best of the combined organizations.
It's taking your headcount, your staff, to about 120,000 globally. And you've talked about, pretty forthcoming about your need to reduce that number. How much of a reduction do you think is needed at the end of the day?
I never really spoke about the need of reducing.
If we could just get in the box with Sydney, that'd be awesome.
It's not our philosophy. What we need to do is to restructure the bank. We need to be restructured, profoundly restructured, because we are out of the situation, and then we need to extract the synergies that are necessary to make both businesses viable and stronger. So we are taking actions as we speak to
previous day close, previous day open, and bottom of the signal not accepting us. This is where we had as well the Valeria Low.
People exiting the bank to retirements or early retirements. We are working also in facilitating movements of people within the bank, also between the two banks as we speak. So I think that I'm confident that we can mitigate the painful part of the job, which is the social cost.
Okay, let's go.
Business that is sustainable.
UBS CEO Sergio Monti there speaking exclusively to Bloomberg's John Liu in Beijing, warning about some of the fragility in China. Now, also in China, we have EU Trade Chief Vladis Dombrovskis holding a meeting with counterparts and business leaders. Let's bring in Bloomberg's European correspondent Maria Tadeo on this. Maria, what will the message from the trade chief to China be?
Look, it's going to be a striking message, and already we got a glimpse of it today in a speech that Dombrovskis made in China. As you say, he is on an official visit for 4 days. And again, a striking quote that really caught my eye, where he says, at this point, when you look at the relationship between China and the European Union, it is at a crossroad, and it is up to China to figure out whether they want to recalibrate or rebalance, or it is a win-win for both, or inevitably they will have to head in different ways. Let's take a look.
We can choose paths towards mutually beneficial relations, one which is based on open, fair trade and investment, and working hand in hand on the great challenges.
Balls are tired.
Or we can choose a
Yeah,
path
we will be bringing POC here.
where the
8 more minutes, I wanna see
decades
what's happened and then I'm going away.
where our people and economies face reduced benefits.
So it's a win-win or lose investment. Those are the words of the trade boss for the European Union, Valdis Dombrovskis. And a lot of this, you can see the frustration is underpinned by that trade deficit, which keeps getting bigger. At this point, we're close now to 400 billion euros in trade deficit that benefits China. The European centers said they want the European Union
Go
to recalibrate
up.
and make trade more balanced between the two
I
countries.
know.
No to decouple, yes to de-risk, and not to be
Okay, we started some trading stop at 75. Go and visit it.
Where do you see a trading stop?
Here, can you see on my screen?
Hold on. Hold on. I got to. Okay, go.
Here. This one.
Okay. Let me see if I have. That's.
But this is the 1 minute setting, so I don't think so.
Oh, okay. Well, maybe after this 4-hour print, something will happen.
Yeah, the value area will go lower. We'll have a new 4-hour forecaster with the new TP areas.
Mhm.
This is why I want the price to go a little bit higher before that happens.
That's a bearish print.
It's a bearish trading stuff, yeah. But this is what I'm saying, you should
Yeah.
visit it. It's just below the view up.
I want to see a bull's print.
So you took along as well?
I've been in it since 25.
Okay.
But I'm already at break even. I took profit at 20 points.
Okay.
So I have 5 micros left. But at break even.
Okay, so you're moving in on your quick strategy with your fancy hands.
I didn't see the. I didn't have it turned on. I had told Adam that I was going to start using that. I turned on the. When it tells us about the new structure, low and high. That's what I was kind of back testing. And I had 2 that printed, but I didn't. At 2 that printed when we had the low, the 796. I had it at the 15-hour and the 1 hour for those markings. So if I would have seen that, I would have turned around. As well as when we were at the high of, this is on the 3 minute, 940 at the 946. I would have switched our position. So I'm going to have them turned off for now. Now to help, not stay in the trade and It wiped out at break even.
Come on.
Come on. And I would really like to see it go back to the high of today of London.
Yeah, at 35 I had 4 contracts, so really I want to go with higher. Like at 820 is my stop loss now, break even, because after adding the contracts it moved my original entry.
It is indeed, and that is displaying itself perhaps most in the equity market, but the FX market will have to carry through. Danny, what you got here is, of course, dollar yuan, dollar up, yuan lower, and lower to go according to Sir Whitehead over at Commerzbank. Keep an eye as well on the Aussie dollar. Iron ore gets trashed, and as commodities come lower, high beta drops down a quarter of 1%. Bloomberg surveillance is up next.
I'm out of this one.
Which out of the longs or the shorts you in?
I'm out of the short.
Okay.
Order filled.
Sorry, that was the trim I took. I'm sorry.
You're fine. Okay.
I'm trying to feel like get this account funded by the end of the week.
Don't forget they just have
Yeah, I mean, I don't really go heavy. Those are different arms. I don't really trade heavy. One or two lots. Take a lot off once I see a certain profit. Once I get to a certain target I'm looking for, and then I step back. I reset, come back later, maybe like 10 minutes later, or an hour later, look for like a different trade or different setup. So normally each of my trades net $250 to $500 per trade, and I do like 2 or 3 trades a day.
That's awesome.
Yeah, I just for me it's like I quit my job recently, to try to grow my real estate business, and I'm trying to get as many funded accounts as possible through different programs. Right now, I have a funded account through Apex. Have you heard of TFT, the funded trader? Yeah.
We never tried to do it. We don't mess with that.
Okay, yeah. So TFT uses MetaTrader. I like TFT because it's not as aggressive. Like it doesn't move as aggressively as NQ. So I'm trading Nasdaq cash, and Nasdaq cash doesn't move as aggressively as the regular Nasdaq does.
2.12%. That's a higher yield.
The highest real yield, inflation-adjusted yield going back to 2009.
So like I can have one contract.
What I mean.
Just inflation. It has
Like I can have like half a lot.
there is something
Or one contract and go to sleep and not really freak out in the morning.
Oh, okay.
not tied to traditional reasons for why yields are going up.
Can't emphasize enough how much I agree with that. A little bit of one chart talks about other factors. We're going to go over the other factors here as we stagger into October. One of the other factors we have, and I didn't see this in London, I get back to New York where there are no for sale signs up. Bank rate 30%, 30-year mortgage rather, bank rate 30, 7.75% 2 days ago. You wonder where that will print later this morning.
And we've been talking about who's paying it, right? And that's the sort of question is this actually going into effect? Michael McDonough over in our Bloomberg Intelligence unit, Bloomberg Economics came out and said that basically the average monthly payment has gone to about $2,300 from less than $1,000 in March 2020. That there is this feeling of just things getting more expensive in the basic day-to-day necessities.
Yeah, there's a number of schools going on this morning, folks. So one of them is China, a mystery of what China's going to do. One of them is a strike. One of them is a shutdown. Good news from Hollywood. I mean, at least thank God there's something out there. There's a difference between the screenwriters and the actors. They lay down tables in different parts of the West.
Exactly. I think the screenwriters, the ones in the back and the actors are usually the facing ones. Okay, there is that good news. What I will say is there the word quadfecta. I was thinking about this because everyone talks about the trifecta, but there's kind of a quadfecta brewing behind the scenes. There's the auto strikes, the government shutdown, student loan repayments, and higher gas prices. You put those together, any one of those couldn't necessarily derail the U.S. economy, but increasing
Now you're going down. You suck.
if put together, this is a different if you will, top
Continue for hour. Okay, we're staying below the 4 hour close previous, so
Dollar is in the cheap area, so if it goes higher, NQ will drop lower. Stupid NQ.
it won't drop. Now it's a time. Now, DC, don't worry. Now it's a time for my retracement to work.
Yeah, I'm not trading it, I'm done.
Okay, when you say retracement, that means like back to a short?
No, but retracement from the short, so.
Oh.
Really, we need to go towards the 70, let's say 50%. Then, if we can go to 84, is even nicer. Like 89, what is my last TP and then a runner left.
For me, I look at dollar strength, really broken out to new dollar strength. But yeah,
come on.
49, I wonder how they deal with that. What do you see when you said the day before you look at what's on the daily that gets your attention?
Session view up. Can we cross it?
You're above $90 once again, and that there was actually data over the weekend showing that hedge funds are now the most bearish, the most bullish on crude and WTI in particular, going back to February.
Hidden bet on the search.
Because young Cow is going to hang up if we don't get the one.
All right. Well, you know how you don't like Fed speak. There are 7 Fed speaks. Just this week alone. No, Minneapolis Fed President at 6 p.m. Today. Tomorrow we have Fed Governor Michelle Bowman. Thursday, the big bonanza of Fed speak. Fed Chair Jay Powell, Fed Governor Lisa Cook, Chicago Fed President Austin Goolsbee, and Richmond Fed President Tom Barkin. And on Friday, the Fed's John Williams. Whether they really lean into this idea that they are are done? Because it seems like that right now in the literature, Ellen Zentner among them, saying they are done. Earnings, and this to me is really a big deal, especially off of Mike Wilson's comments over the weekend. Retail earnings in particular. Tuesday, Costco, this is fourth quarter. Wednesday, H&M and Micron, that is the whole semis kind of question. And Thursday is Nike. Curious to see whether these are bespoke stories or whether we get a theme that starts to come together. And on the economic data front, we talk about home prices and the mortgage rates, but we get home price data as well as new home sales, just how much this market is broken. We get that tomorrow, jobs claims Thursday, and personal income, spending, and core PCE on Friday. That is key. The consumer, how much do they really continue to surprise to the upside the way a lot of the economic data has?
This really lays out the week ahead, folks. It's not a sleepy weekend of October. I think for the first time, you can look at this, folks. On the Bloomberg Professional Service, on the DES screen, the description screen, a plethora of data there. They have JP Morgan, October 13th.
Yes, I saw that.
October 13th. They've also got December 14th, which is when the Bruins pull ahead of the Toronto Maple Leafs. Joining us now, Luke Kawa, asset allocation strategist, UBS asset manager. What did you write about this weekend, Luke? What is the distinction you see in literally the cacophony of news we have?
This weekend is a lot more reading than writing out credentials. Very interesting for us to watch as we go into year end. A couple of things that seem like pretty big things that markets will be resolving is one, a lot of the, as this is noted, there's the, I'll call it the quintet, throw in higher rates in there too into the mix of things the U.S. economy will be dealing with. We're dealing with a bit of a turn in the second derivative of U.S. growth from Q3 into Q4. So the most consistent trend in markets since May, we would say, has been U.S. growth both accelerating and surprising to the upside. That's something that's going to change. On the other hand, two of the biggest drivers for markets, arguably, in the past couple months have been that resilience of U.S. growth that's driven the part of the higher real yield story, also certainly elements of term premium and supply in there, but that possibly changing as a second derivative of U.S. growth changing, getting a little stability. So that relationship to us is really at the fore in terms of what we look at as driving markets for the coming 3 months.
Hey, Cornish, be sure that Luke gets the memo that we're not doing too many calculus on Mondays. There's a great rule about that. Luke, you got a really, really smart idea that earnings haven't deteriorated, and yet the zeitgeist this morning is, should I sell stocks? Dovetail a non-deterioration of earnings with the idea I really want to get out of equities.
Well, I guess we would take the other view to that. We're not necessarily adding risk, adding cyclicality into this pullback at this time. But our view is that real underlying story is what's going to win out at the end. That there is a limit to how much good news for the economy can be bad news for stocks in terms of the valuation pressure. That you really are going to have the real key driver of earnings growth. And by the way, since S&P 500 peaked for this year, S&P 500 earnings estimates 12-month forward still up another 3%. We think that's ultimately the story that's really going to win out when it comes to the equity market. But we're very cognizant that some of the signs we've seen in markets recently, I would say, credit spreads perking up a little bit. Some of the outperformance of defensive equity, those are just things that have us on alert, on watch, I would say.
So Luke, just if you could frame where you are, because you have been bullish for quite a bit, whether you're becoming less bullish now, just because of the quinfecta, or whatever you want to call it, the 5 different areas coming together. I can see Tom looking at me like, what did you just make up? Yes, I'm trying to make up words on this Monday, but at what point do you start to become less bullish and start to look for signs that maybe things are turning and the economic data is going to start surprising on the downside in a more substantial way?
Well, I think one thing that we do expect to see, or that will really be juggling a lot in the coming quarter, is that odd juxtaposition of the second derivative returning in the U.S., but still expectations seem to us too low. Now you can quibble whether the ECFC economic forecast for Q4 GDP in the U.S. of about 0.5% are really what the market's probably pricing in a bit of a better outcome than that. But it's that juxtaposition of us, these temporary factors
are going to be slowing growth in the fourth quarter. But even so, we probably see growth coming in, a bit ahead of that. How does the market deal with the issue of the turn versus continuing to be positive versus expectations? We're very aware, we're very cognizant of the idea that as you slow, as you turn, there are going to be points in this market where it's going to be tough to tell whether you're heading for a soft landing or whether that deceleration continues and you're heading into something a little more severe of an outcome. Our view so far is what's shaping up in the fourth quarter. It is not going to be that latter, more negative outcome, but there's something we're definitely going to continue to monitor in the weeks to come.
Come on, can you move higher?
This is interesting because it's almost a mirror of the question that we asked when we started the year. Can the economy handle a 5% potentially federal funds rate? The view then for us was yes. The view then for us with stocks is that stability is really what's needed, much more so than yields coming down a lot. For stocks to work, it's just that the negative momentum in the bond market really does have to calm out. The positive momentum in oil prices really do have to cool a bit, and that cooling in the second derivative for rates and oil is going to be something that offsets that turn in the second derivative for U.S. growth and net out a little better for risk assets is our view.
Are you still bullish on China?
We've been neutral on China for a while now. Hopefully we discussed last time, but it's just it's a continued dichotomy between the fact that valuations are very depressed. It's not clear that there's a catalyst to see higher, faster growth in China, but when risk assets in China are at this depressed valuation, when they're this unloved by fund managers, that it's often a time where you get to see more meaningful moves to the upside. So a neutral view on China, but we're really counting on some of the piecemeal stimulus putting more of the floor under growth. Don't expect anything bigger from Chinese policymakers in the near term.
Look, your charm is a student of the street. What's the better?
What's right here? Oh, it's that storyline, right? That it's.
Yep.
It's magnet. Which is also the previous something. New York session low is where we're at.
It's the idea that Lisa talked about in the intro, just these other factors that we're seeming to be pushing up yields. That's making the term premium argument. The most simple thing with the term premium is nobody really understands it. We're all going to have very, very different definitions of it. But usually some of the things that people associate with term premium, they're going to correlate with how growth and inflation are moving. What's different this time is that supply is moving much more much more pro-cyclically than it has in the past. So that's something where you have this element of term premium that we typically come to have associated as being associated with growth, with inflation, that might be moving in a bit different direction this time, and that's what I think caused a bit of a scare to relying on your kind of traditional models for how and when to be adding a lot of
UBS, thank you so much for being in the storm here on Monday. Merriam-Webster, thanks so much for watching in Springfield, Massachusetts. Merriam-Webster emails in and says, what in God's name was that? Brambles quinfecta, it's like a trifecta or a quadfecta, but I think it perfectly captures where we are. I think you nailed it. At least the quinfecta that we're here is all the reasons not to participate.
Well, I originally thought it was a quadfecta, but Luke Halla was grateful, and I was grateful enough to him for making it a quinfecta. This is the issue, and we talk about toxic brew and we laugh. Yeah. But when you put certain things together, they take on a new meaning than if they were just taken in isolation. And I think that's the reason why people are starting to feel like, maybe this time we're going to care a little bit more about government shutdowns than get us back.
Our focus after Monday when we build a picture is market dynamics. Luke Howell with us with UBS. Coming up, Kayla Kaminsky, the Alpha Simplex Boston, she is absolutely brilliant on the trend, the new trend, or is it a range? Stay with us, futures at -2. This is Bloomberg Surveillance.
Auction view up again. Come on, give me my TP.
What's your TP?
Just now, 67.75. The next one, it's 89.
Yeah, my TP's about to hit too.
I remove one from here because we can come back a bit.
Politics. I just really can't say the movement, at least over the weekend. There are various people in the kiosk. Of course, we were in London, that home was mental. So that will be early on the weekend. So we were watching 5 Arnold Schwarzenegger movies. And I put on for various people in the family the Arnold Schwarzenegger speech at the 2004 Republican Convention. It might as well have been from Venus or Mars compared to what McCarthy's putting up with today.
Does that look like martinis while he
No, he gets the olives though, and there's no question about that. The biggest believer that Schwarzenegger never was, we're going to do a market check and we'll get to this, and this is a shutdown. And so basically it's going to shut down because they have no clue. We're going to do it on the screen here. Oil charlatan with an abnormal confecta attention. Yields say it all. There's a comment on a 4.49% 10-year yield.
Well, Luke picked up on this, right? This is being driven by something ambiguous. It's not that inflation expectations are going up. It's not that growth expectations are going up. Is this something else, whether it's people protesting the budget and all of that? Is it because of that? Or is it simply because the Federal Reserve is selling bonds? They are not the buyer of last resort in the same way. And it's the same with the ECB. And this is a game changer in a very unusual cycle. And that, I think, is something a lot of people are picking up on.
We're going to watch this very carefully. Wall Street agrees to meet 2.12% in the 10-year real yield curve disinversion. We'll get to that with our economists here in a moment. We need to jump now to one of the separate series of interviews where we will brief you on a shutdown of the federal government of the United States of America. It is different than many other processes: debt deficit, budget shortfall, and all the fancy words only everybody understands. Briefing us out of Washington from Strategas, it's a parent company. Jeanette Lowe, Director of Policy at Research. Jeanette,
Very divergent.
odds on shutdown. What will you listen for today or tomorrow to change your odds to calibrate a government shutdown?
Well, good morning. We won't have Congress really start to roll out any of the potential bills until tomorrow. So that is where we're going to start to see the process really develop. Our anticipation is that the Senate is going to move first. They're going to try to put forward a short-term continuing budget resolution so that will keep the government funded for potentially a month, 2 months, up to 3 months into early December. And then they're going to send it over to the House. The House then has to decide, do they have the votes to potentially pass that CR, even if it's with changes, or does McCarthy have to then move with the Democrats to try to pass this, or does he allow the government to shut down? So we're going to be listening to the rhetoric that we hear within the House. We have heard a lot of Republicans over the past week been frustrated by the handful of conservatives who blocked any movement, and so as that course might change, we may be able to see this potential change that we don't hear
Can we cross the... We got 50% of the channel. Trailing stop, which really wanna test it. VWAP and 5 minute WMA. 92. Okay. I got the TP at 90. South, you're still in your long?
Yes. Somebody else is in a long, isn't
I'm in the long as well right now currently.
Okay, cool. Let's see where this will go.
But we are in a bearish fair value gap right now.
Yeah.
Um,
If we won't be accepted in like 74, 77 area, then we're going down. If it accepts us at 77, we're going to 94.
yeah, if we can get above VWAP, that would be amazing. Well, I'm already up $1,000 on this new account.
Okay, that's cool.
I should have taken Texas advice and grab micros instead of grabbing 2 or 3 minis at a time. Because I'm only left with 1 mini and I can't trim, so I'm stuck with this 1 mini.
That's why if you wanted to do 1 minute, you did on 30 micros.
Yeah, my only thing is with the 30 micros is that commission is crazy.
Oh, I don't know.
Yeah.
That's how I never paid attention.
Check it at the end of the day. That's really a big commission.
Yeah, the commission, like, most I've ever paid in commissions in one day had to be like $1,200. But I made a lot of money, but I was trading, micros. And ever since then, I was like, I'm never giving away $1,200 just in commissions. But, yeah.
Let me see.
Okay, we got a contrarian candle. If they stay like that, that's good. If we not accepting this price, we dropping, making new low.
Well, let's see if we can break the drought over there. And if the bulls spread.
Because if we drop from here, then TP is at 65, 765.
Yeah, I mean, so one of the things that obviously for Biden too, this is if there is a shutdown, there's obviously a political price to be paid, but Biden actually could have an opportunity here to improve his standing, and actually I guess show that he's trying to work to have the government reopen. But I think the fact that there is a lot of pressure on the auto workers is also trying to highlight, at least from Biden's perspective, a little bit about the impact this would have on the on the economy. And so that's going to be really important ahead of these decisions, because unfortunately we're probably not going to know whether or not we're going to shut down or not until about Friday or Saturday, right as the deadline hits.
Jenna, help me here. I just listened very carefully on the path of a shutdown. If it's 8 or 9 days and everybody gets retro pay, etc., why are we doing this?
So this is usually about making a point. So if we look back at the 2013 shutdown, that was really a shutdown that occurred because the Republicans were looking to block funding for the Affordable Care Act that was going into implementation at that time. This is now an argument about saying we want lower spending and we want something done about what's happening at the southern border. And so usually the people in Congress feel that doing a shutdown will allow them to get their message across.
has not been particularly successful. They do not necessarily win concessions. And in fact, this time, if we look at what might ultimately happen, we can see where the bipartisanship is in Congress, that we're going to have a spending deal. It's going to be higher spending than the conservatives want, and they're the ones who are pushing for this shutdown. And they have to see whether they're going to have leverage to actually get something done on the border, which is ultimately what they want. So shutdowns have not been particularly useful political instruments. They do not get much of a point across. They kind of allow people to get their frustrations out. But then we have to go back to that.
Okay, we'll have a small drop now. We'll see how big the pullback showing that we should drop.
But then you have to reopen the government and you have to start governing again, and that actually can be a positive outcome that comes out of this.
Lieutenant, well, thank you so much. Greatly appreciate it. When we continue to monitor this, I need to tell you about balance of power. A very focused attention on what we see going on in Washington. Joe Matthew and reporting Kayla Williams talking about this. Well, balance of power, look for that in the early evening each and every day. Oliver Street and Berenberg next.
I've got one of the profit stops at 860.
From the beating heart of global finance, economics and politics, and wherever newspapers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for you? Is this new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a good question. I'm Francie Macron, and this is the pulse of a weekday at 9 a.m. only on Bloomberg.
One of what we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that's going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We will be Ukraine's biggest airline the week after they tell us it's safe to go back in there because we're going to charge back in there. Initially, we were planning to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, in the first 6 to 12 months, open up large bases of Ukraine. We're talking to the Ukrainian authorities about creating an environment, cost agreement of which we could lead the charge of air travel into a post-war Ukraine.
Just wake me up and going up. That's amazing. I love it. Okay guys, I'm going. I'll be back for the New York session. See you later.
Okay, Koltun, see you. Bye.
Alright, see you later. Bye.